Martin, let me ask you this. I'm curious to know if you have a target on Bitcoin for year-end, because last year was a year when everyone was really bullish, and then had all these targets like 150,000, some beyond that. What's your target?
I mean, my target is, I make it, I go back to the technicals because I still think we are in a down year. Why? Because we have this halving cycle where Bitcoin supply is getting halved every 4 years. And we are now in a down year, right? 2014 was down 60%, 2018 was down 72%, 2022 was down also around 60%. And now we are in a soft year again. But I think here is the nuance. So each cycle's drawdown compresses as the institutional base grows. And I think we are currently in a range between 65 and 75. And I think holding the 74K mark now is very important. But generally speaking, investors who entered patiently at the equivalent phase in prior cycles were well rewarded 12 to 18 months later. So this is a more constructive entry window than the headline suggests. But if you want to have a mark, I think if we hold the 74K, important is that we then reach 81 and then above 81. That would be a very constructive environment towards the 90s. And that's where I'm looking at. So I can't give you these outrageous 500K numbers, but I think investing longer term now is a good possibility to add.
All right, thank you, Martin. That's Martin Lineweaver of Market Vector Research.
Thank you.
We appreciate your time this morning. Coming up, time for Options Corner. We'll dive into Oracle after Monday's big rally. Shares higher again this morning. We'll be right back.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization.
Remember, if you get enough points and you can make a spin on the wheel,
up-to-the-minute news and insights.
You can win a Dogecoin. You can win a bunch of other stuff, which I'm actually going to go.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
We're back on Morning Movers. Oracle's powerful rally continues this morning after a nearly 13% gain Monday. The company announced an expanded partnership with Bloom Energy to support the rapid build-out of its AI and cloud computing infrastructure. Oracle looking to procure up to 2.8 gigawatts of Bloom fuel cell systems under the deal. Time now for Options Corner. Joining us now for a deeper look at the chart is Rick Ducat, lead market technician. All right, Rick, let's get into it. What trends do you notice on this chart?
Yes, good morning. Nice day for Oracle to be sure, but still underperforming the tech sector here. The XLK up 45.5%, Oracle up only 15.6%, and definitely a rough time overall for these software companies in general. You can see kind of the pain spread across the board here, but Oracle did have a nice day on its own. So now we can see that on our candle chart for Oracle during the past year, a downward trend line here looks like it could be on the verge of being broken with today's activity. We had a nice large green candle the other day that closed near the highs of the session. So we also could backtrack, look at some of these supportive levels that stand out here. Much of the activity here is based on small gaps and notable high and low points here. So some standout areas, 140 where we saw consistent lows recently here, and then below that 129 and 123. Meanwhile, to the upside, we can see that a notable high point that we established after our last earnings event comes in at this red line here near 172, and then a similar gap gap resistance area here between about 180 to 189. So now we could look at our RSI and our moving averages here. We are crossing above our shorter term moving averages. The 63-day in gold comes in just shy of 161. We can also see RSI broke its trend line and broke above that 50 midline. So more of a bullish setup here coming into today's trading.
All right, thank you, Rick. Appreciate that. That's Rick Duquette, our lead market technician. Now, to take us through an example trade, we've got Tom White-Coast, a fast market and senior options contributor. Tom, what's the approach you would take for an example trade for Oracle?
Well, Rick made a good point on the technicals. It seems like we're breaking out to the upside, which we'd been under pressure. I mean, the stock's still down over 50% from those all-time highs that we saw last fall in September. So I'm going to take this with a grain of salt and give you an example trade based on the fact that, hey, even if the stock doesn't kind of consolidate here and move higher, maybe it goes a little bit lower, you're protected a little bit on this. So I went on a couple of weeks here, cash secured put. It's neutral to bullish in stance. I went out to the May 1st weekly options, 17 days to expiration. So about 2.5 weeks in this position. I'm going to look at selling an out-of-the-money put, the 155 strike put. The stock opens up here about 163. You're going to collect roughly about a 420 credit. That's what you can make on this trade, 420 bucks per put that you sell. Now, if you collect that 420 credit, what's it take your break even down to where you start getting hurt? That's below 150.80 to the downside. That's about 7.5% below the current share price where we're going to open up. So you've got that nice cushion. Probability of that put being out of the money at expiration, nearly 60%. So the probabilities are in your favor. You're collecting a high premium just due to implied volatility levels in the overall market also. But this is one of those twofold type of trades. You either want to collect that elevated option premium or, hey, if this stock fails again, which it's failed repeatedly over the last 6 months or so, you're willing to buy the shares at that break even of $150.80 to the downside. So it's capital intensive because you might have to buy the shares if the stock falls back below 155. So keep that in mind on this type of strategy. But this is one of those repetitive things that, hey, you can pick a strike where you think it's going to remain above if you just want to keep on collecting credits and move out on a week-to-week or month-to-month basis based on what your assumption is. But you got to make sure that you remember that you might have to buy the shares if the stock does flip below 155 before expiration in the next 2.5 weeks.
All right, thank you, Tom. That is an example trade there for Oracle. Those shares continue to gain ground this morning. Thank you so much for joining us today on Morning Movers. You got S&P Minis looking to add to yesterday's gains. We'll see if the bulls continue to control the floor. I'm Diane King Hall. Download the Schwab Network app. It is in the App Store and tune in 24/7 on schwabnetwork.com. Stay with us. You've got Opening Bell with Nicole Petalides up next.
So what is unique about Schwab Coaching is the community.
There's a lot of energy, like-minded people are learning with you.
You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face-to-face with you and 400 or 500 of your closest friends.
Wow. Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience, and they help me fill in those gaps as an educator.
People learn differently, but all those ways we actually teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platforms.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Oil right now, $95.99 the barrel, and it's earnings season. Okay, so we're taking a look at a lot of those banks, the role of inflation in the market amid the elevated energy prices that we've been seeing. And we will take the market with a technical perspective for you this morning as well in a couple of our segments. So we'll take a look at that. Here are this morning's futures. So you've been seeing here now some arrows that are moving to the upside, and the S&P futures at up 17 points, up 0.25%. The NASDAQ is up 0.5%. Dow Jones Industrial Average futures are up 45 points, and we are seeing the Russell also gaining, which has been a great performer this year, 2026. As we take a look at the futures products, oil and gold are up mixed. You do see oil down at $95.99 the barrel, down $3 the barrel, and gold here is up about $26. The VIX is at 1831. 18, wow, I haven't seen that in a while, and the 10-year bond yield at 430. The Bitcoin trade 74,600, up 1.5%. Is this risk on? And the dollar comes down a little softer here, 97.78. That's worth noting. Kevin Hanks is with me live at the CBOE, pre-bell playbook. And I was reading something this morning, and it basically said Iran always loses the war, but wins in the negotiations. But this time is different because Iran lost the war, as it always does, I guess. It always gets put in this place. But in the negotiations, they win. They get something. But they're not getting anything this time because they don't have that ticket of the Strait of Hormuz. They don't have a leverage card to play. And so this time is different than all the other times. What do you think of that? That was in the Free Press. I read it in the New York Post this morning, and I thought that was a very interesting topic. What did you think on that, Kevin?
Good morning, Nicole. I believe that Iran's cards that they've always had to play were two things: the Strait of Hormuz and nuclear weapons, right? Those are the two things that they could that they could threaten with. Now, nuclear weapons have been taken away. The goal of the United States is to make sure that they're permanently taken away. The Strait of Hormuz, they tried that. That is also not working, as the United States and other countries, and remember, pressure from China is significant there. When the Trump administration threatened and started to blockade the Strait of Hormuz, that affects China's ability to get their energy, not only their energy, but their energy at discounted prices. So China has a big say in what's going on right now, not necessarily to the United States, but to Iran. And therefore, that's why I think now the rumors are that negotiations are going to start up again this weekend. There's more going on. The good news is this is an administration that is simply not going to budge on the two things that they care about, which is nuclear bombs. And, you know, now there's whispers of a 10-year agreement. A 10-year agreement for developing a nuclear bomb is a loss. That will never happen if you listen to the Trump administration. So I think there's a lot going on here. The parts are starting to move, but the markets are telling you, don't listen to Kevin Hincks, listen to the markets telling you that the tension is dissipating more. It started yesterday. Crude oil futures down again today, market up. The overall tension continues to dissipate, Nicole.
Yeah, I mean, I think it's really interesting. And of course, as you mentioned, is it 10 years? The negotiations started that the U.S. was looking for 20 years and Iran was looking for single digits. 10 years, we'll see whether or not. Oh, and that they also ran into those numbers were revised the prior month. So I think you may have heard from Citi, Goldman, and Wells Fargo today. What do you think? And, I'm sorry, Goldman was yesterday. JP Morgan was this morning. People who know.
I think the overall,
right?
JP Morgan is down about $2.50 pre-market. Wells Fargo is down slightly pre-market. Citi is actually holding and slightly up. Their transformation with Jane Fraser continuing to take hold. I think JP Morgan is Jamie Dimon playing a little bit of risk manager there, talking about increasingly complex set of risks that are out there in the market. They also lowered their guidance for full year net interest income, which is a big way that these banks make their money. So net interest, they guided a little lower on that. But I think all things considered, with the nice rally we've had in financials up to these numbers, that they're only down slightly. And like I said, Citigroup is actually higher, that they're holding the current levels fairly well. Pretty positive overall outcome for banks after we saw Goldman sell off pretty hard yesterday and then come almost all the way back, Nicole.
Yeah, and look, JP Morgan saying consumers and small businesses remain resilient. They did report profit and revenue. The economy, for Citi, it was the best quarterly revenue in a decade. Investment banking is doing very well overall. Yesterday, we saw a record quarter for Goldman Sachs. You noted the fixed income and commodities business being a little weaker to be expected because of the flattening of the yield curve. So we're seeing that in some of these banks. Kevin Hincks, it is great to see you this morning. 2 up, 2 down right now. Thank you. All right, a look at this morning's movers. And joining me right now from NextGen Investing is Jenny Horn. and taking a look at United with the interest of taking over American Airlines. It is great to see you.
Great to see you too, Nicole. And this is a really interesting story. So we're seeing, American today take the bulk of the gains this morning, at least jumping ahead of the opening, following this report that United could be floating this idea of course, potentially taking over the aircraft carrier. And so that would create, obviously, a mega company in a deal that would be definitely in confluence with government officials. So United CEO Scott Kirby did pitch the idea of a potential tie-up to these senior officials just days before the Iran war began. Bloomberg did report this late Monday afternoon. It would create, obviously, the largest U.S. airline and would be the largest consolidation in the industry in more than a decade. And so not clear whether these talks are underway. This is still fairly preliminary, but shares of American jumped 5.5% this morning. United also had a decent pop in reaction to this news. Airline mergers have been notoriously difficult to complete in recent years, like the JetBlue Airways and Spirit Airlines combination that was canceled back in March of 2024 after the Justice Department did sue to block it on antitrust grounds, and a judge agreed. So then American and JetBlue were also forced to end their alliance in the Northeast in 2023. Well, both of these happened under, of course, a different administration. These regulatory hurdles still do definitely have some grounds, particularly if a partnership looks set to lead higher airfares. So American has struggled to keep up with United and fellow rival Delta in the recent years, as we've seen, a pretty sizable contraction of 50% pullback just in the last 5 years. In the same period, United is up 68%. Delta has climbed 39%. And so, again, while this is still fairly preliminary and there's still a huge legal framework that has to be laid out for this to even be a real possibility, it definitely at least signals that United obviously is using its cash on hand to continue to make it more competitive, and more of these premium offerings have really served its growth story as of late. Same with Delta. But American Airlines, on the other hand, has been riddled with debt for, the better part of the last decade. Debt that they cannot seem to continue to pay off at the pace in which makes them then competitive. So it does put this at an interesting position. All of our major banks have said M&A activity is definitely on the up. But as we know, with these airline mergers, it gets complicated, and this would be a mega deal as far as the airlines are concerned, Nicole.
So when I heard this morning, Jenny, the first thing, right, I wake up and I hear United wants to merge with American. And this is where, the old heads come in, like Kevin Hanks and myself. I woke up and I was like, wait a second. I was like, didn't United merge with, and I was like, it took me a second, but it was Continental. And way back in 2010, United merged with Continental. And United wasn't particularly great at that time. United now was the better of the two between United and American. But back then, United and Continental, there was a lot to be done at United. And I was thinking United wasn't even UAL. It was UAUA at the NASDAQ. Continental was CAL here at the New York Stock Exchange. So this merger happened in 2010, and that's when it became UAL, because it was Continental, CAL, and UAUA put together. So the minute I heard this morning, I was like, wow. The big thing, though, to put into mind, though, is that United and American are number 1 and 3. So we'll see whether or not that kind of deal goes through because of the positions that they have. But you have a more friendly administration, to your point, rather than the Biden administration, which was not so hot on mergers at that time. Let's get to your Tesla story. I know you saw an upgrade there.
Yeah, Tesla with a nice upgrade today, and definitely in need of some analyst favorability. We've seen the sell side get a bit more cautious on this name, as they did, of course, parse through the deliveries and sort of weigh right now some of the growth expectations and promises made from Elon Musk with the fact that we are seeing the slowed part of their automotive business. But also last week floated the idea of this cheaper vehicle. That was also read pretty positively. And so UBS did upgrade Tesla shares to neutral from sell with an unchanged price target of $352 a share, saying that current levels are more evenly balanced as far as their near-term demand challenges and investment period with their long-term physical AI opportunity. Tesla shares, in their opinion, trade on more sentiment and momentum than fundamentals, which is not a new story for us that follow Tesla as closely as we do, but they do believe that right now concerns over EV demand, a first quarter energy shortfall, and higher costs costs, as well as higher capital spending requirements and a slow progress of their robotaxi and Optimus have weighed on shares. However, they do expect some eventual progress on the robotaxi front and Optimus, and continue to really view Tesla as a major leader in physical AI. And where Tesla is benefiting right now is also the, of course, enthusiasm tied to everything with SpaceX, this potential IPO that, of course, we're basically gauging for around June, but obviously we'll have to wait and see on that. But this name right now trades with really just a proxy into everything Elon Musk is doing, less about the true fundamental story of Tesla, which is, again, not a new narrative. I know it's the same narrative that the bears want to make about how it's overvalued, it should be valued like a car company. Fact of the matter is, it's also valued more than anything to me like an Elon Musk company. Will we see that same, that of course, proxy read would use another public company to trade to get access to Musk? I will be very curious to see, but at least this one bear turning a bit more cautious today. Again, a pretty key turn from sell to neutral. It's not necessarily bullish yet, but it's definitely moving into more of a favorable conviction for Tesla shares, Nicole.
All right, Jenny Horn, great to see you. Thank you so much. Appreciate it. Coming up, we'll get you ready for the trading day. Sean O'Hara from Pacer ETFs is standing by. Opening bell. We'll be right back.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Hi, I'm Alex.
I'm Jane.
And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Good morning and welcome back to Opening Bell right here on Schwab Network, live on the floor of the New York Stock Exchange. We're moments away from the opening bell ringing here on Wall Street. And Sean O'Hara, president of Pacer ETFs, is with me. We're getting in some of the bank earnings. For the most part, we're seeing a lot of beats. How are you feeling about earnings season overall? I mean, this is really, truly just the beginning. What do you think?
I think things are going to continue in the same vein. I think you're going to see more beats than not. I think that what's really most important, and I think we see this in some of the bank earnings, is what are they forecasting going forward, and what are they telling us? We're sort of in a very unsettled time, if you will, because although the inflation number was better than what most people thought, the price of oil has been sort of wreaking havoc on the markets for the last month to 6 weeks. And we don't really fully know what the longer term effect of that is. So I think, with regard to this quarter, all these numbers that are being reported are sort of pre the Iran invasion. And, we'll have to pay attention to guidance going forward to see whether there is, in fact, some more significant damage being done here, mostly by, the elevated price of oil.
Right. What was interesting within the reports we did hear from JP Morgan, they talked about consumer and small businesses being resilient, and that consumer spending, in fact, that saw growth, which was outpacing that of last year. That seems like a nice sentence, doesn't it? Better than last year, more spending. That shows some confidence in the economy, doesn't it? How do you feel about the economy?
Yeah, I think the economy overall is solid. I mean, the consumer has really been the backbone, if you will, of all of this, all of the economic drive in the economy. But there's two other factors I think that maybe people are not paying enough attention to, and that is that, we're now on, tomorrow's April 15th, so most everybody will start to receive their tax refunds, and I think that'll be a boost to the potential consumer spending. And then the hyperscalers continue to spend big money on that AI build out, which is a big driver for economic growth as well. So I would say overall, if you could put what's going on in Iran, to the side, everything looks to be, pretty solid. It's just we don't know what the long-term effect, if any, is going to be on what's happening there or how long this conflict is going to last. Your previous guest, I think, said it correctly. I think maybe this is the first time that the Iranians are dealing with a president who has such tremendous resolve and isn't going to back down. So we'll see how long it takes. But, if you set that aside, you've got, wage growth, you've got, tax refunds coming, and then you've got this massive spend, which is more than the entire consumer spend is on an annual basis with the hyperscalers building out their AI capacity.
Understood. When you look at oil, what are your expectations here, near term, long term?
Well, long term, I hope they get things settled and we get back to, a more moderate price. I mean, it's been pretty wild. I think it's been as high as 118 and then it's dipped down below 90 for a period of time. So it's been pretty volatile, and I think it will remain so until we get some kind of resolution there. And so, the long-term damage, it's not a matter of them settling things and then things will go back to normal. I saw something the other day, an oil tanker goes the speed of somebody riding a bicycle, about 15 to 20 miles an hour. And so even if they open things up, and they started to, ship more out of the Gulf or past the Strait of Hormuz, it will take some time for that supply to reach its ultimate destination. And so that's perhaps, what keeps the oil markets a little unsteady.
Do you have ETF picks for us today, stock picks, ETFs that folks can really move on? What do you like these days?
I'll tell you what we're seeing in terms of flow. So there's been a sort of a change in the guard, if you will, in the U.S. It's been more quality and value, if you will. So, the Mag 7 stocks, are struggling so far this year and have done so for a little while. So there's been a rotation away from that over-concentrated trade there to higher quality companies that, generate a lot of free cash flow. We've seen flows into international that, they've picked up significantly. I think that's an opportunity for folks, whether it's global or international or emerging markets. And then, we've seen the AI trade, but not necessarily the hyperscalers. We've got a 3-pack of ETFs that sort of go from beginning to end on the AI trade, which is we need the power. So we've got a pipeline and natural gas fund. That's going to be the energy supply, we think. We have a data center product that owns the physical buildings. And then we have a separate product that owns everything inside of the buildings. And so rather than betting on the hyperscalers being able to get a return on their investment, if you wanted to play that AI end to end, you would buy USAI, which is the pipeline and gas. You would buy SRVR, server, that's the data center, the physical buildings, publicly traded names that specialize there. And then the component parts that are going to go in, which is, chips, hardware, software, networking equipment, cybersecurity, that ticker is TRFK. So we're seeing some interest in that as a way to say, rather than be the spender here and, making the bet, we'll be the receiver of that, $3 to $5 trillion worth of spending that's going to happen. So all of those three names benefit from that spending. And are profitable companies within all of those ETFs. So you can be on the right side, perhaps. You don't have to worry about whether the Googles or the Amazons are going to ultimately make money on their massive CapEx. That CapEx is going directly into those three funds, USAI, SRVR, and TRFK.
Yeah, all right. Well, thank you for bringing us those three ETFs in the AI trade, not just the Mag 7, but how to do it without the Mag 7 in a different way. Sean O'Hara, thank you, president of Pacer ETFs. We appreciate it. Coming up, a quick break. You are seeing U.S. stock index futures to the upside here. The start of trading is just moments away. The opening bell. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
Welcome back to Opening Bell. It's time to count you down to the start of trading. After 2 weeks of gains, we've had some up arrows again here this week. We're looking, obviously, at maybe talking again once with Iran this weekend. So a lot to watch there. And oil has come down some, and we have a lot of news when it comes to banks and Amazon and more. And Sam Vadas is with us and watching it all. So some of your thoughts this morning.
Right, yeah, so some nice price action building on the gains we saw yesterday. We've now regained the wall's sell-off. I think that's really notable now, Nicole. And obviously, the Iran conflict starting on February 28 at 68.78 right now. And the S&P 500, of course, recouping some of that within 1.5% or so within the all-time highs. So this is obviously something that many are tracking right now. The NASDAQ also up 9 days straight. So technically, things have looked pretty supportive here. Also, as the major indices have been distancing themselves from those key 50, 100 and 200-day moving averages too. So people have been talking about the great price action we've seen in this market, but they have also cautioned about weak volumes. In fact, yesterday, although we did see that nice gain, particularly that late stage rally in the afternoon, we still saw the weakest day for volume of 2026, the second weakest day, I should say, for the year. So there still seems to be a lot of talk amongst traders this morning that there is a lack of positioning in this market right now, and the chase is on. So big question as to whether we can believe in this rally just yet. But I mean, certainly putting the wind back in the sails of markets again this morning. Cooler PPI, of course, significantly milder. We've had Bessent talking about a bit of a wait and see approach on lowering interest rates, so we'll wait and see. As far as the banks, of course, we've had some mixed earnings out of them. The IEA with oil seeing demand falling for the first time since 2020, so that's obviously being factored into oil prices this morning. Pakistan, as you mentioned, saying that they're going to be obviously holding these talks between the US and Iran on Thursday. So we're counting down to that. And in the meantime, as far as the brokerage calls on equities, I mean, Citi upgrading US equities to overweight, EM to neutral, but BlackRock upgrading US and EM to overweight as well. So it feels like we're going back almost to this pre-war playbook, Nicole. I mean, if you take a look at the Asian session overnight, you had a nice rally, particularly in Taiwan. In fact, the TAIEX hit a record overnight thanks to heavyweight TSMC. I'm also keeping an eye on, speaking of Asia, some Chinese ADRs this morning. Just watch Pinduoduo, watch Alibaba, watch JD. We've had a Chinese report out suggesting that they could cop a fine over some of those food delivery practices. That's according to the Nikkei Asia. So that's a story that I'm keeping eyes out on as well.
And the IMF forecasts for growth have come in over the last 10 minutes or so, and a little bit weaker, coming down a bit, 2.3% versus the 2.4% forecast prior.
Yeah.
Also for euro growth. U.S. Treasury Secretary Scott Bessent talking about the agenda for G20, and it's going to be all about growth and the global imbalances and the risks that go with that, and with a focus on China in particular. You are looking at NVIDIA with some news.
Right, yeah, so it's come out and denied this report that we learned about yesterday. This was according to Semi-Accurate. According to their website, NVIDIA had been in negotiations for over a year to buy a large company, they say, that will reshape the PC landscape. And they've been following this story, they say, since late 2024, and the time is approaching to make a deal or walk, they say. Subsequently, we did see shares of some of these PC makers like Dell, HP, on some of the speculation that these could be some of the names that are involved here, rallying yesterday, but then NVIDIA coming out and denying that report from that website, saying that the media report is false. NVIDIA is not engaged in discussions to acquire any PC maker. So obviously that's something to look at, and they have sort of nipped that in the bud now, but we did subsequently, as I say, see a nice pop in some of those companies. Across the tech landscape, though, I mentioned this yesterday, Nicole, you and I were discussing it. Keep an eye on Intel today. 9-day winning streak. The last time we saw that was back in 2020.
It's time now for the opening bell. All right, and here we go. We're looking at the stock market with some up arrows this morning. The Dow Jones Industrial Average is at 48,234, gaining 16 points right now, so fractionally higher. 69.06 on the S&P. I love seeing the 69 handle, right? You haven't seen that in a while. And by the way, yesterday when I was taking a look, do you know we are now positive for the year, right? Year to date, the S&P is now positive by nearly 1%. Looking at the Dow Jones Industrial Average, now you got me wondering. The Dow Jones Industrial Average is positive by 0.4%. And the tech-heavy NASDAQ, which is up right now 0.5% at 25,531, year to date is up 1.1%, right? Just when it was all doom and gloom, people are feeling a little better. Year to date, the Russell, the small caps, if you were in that, you are so happy. 1 year up 46%. I almost can't even believe my eyes. Year to date up 8%. Okay, that's where we start here as far as sectors. There's plenty of green here. Some of the leaders include tech and communication services, and also consumer discretionary. Let's continue to take a look at some of the story stocks, important names to watch. Diane King Hall is here. We just had our opening bell, and the Dow is up 12 points here, Diane. You're looking at Oracle Power deal with Bloom Energy.
Yeah.
That's another big one.
Yeah, this powerful rally continues for Oracle. Bloom Energy also rallying big this morning off the back of an extension of their partnership. So Oracle and Bloom Energy announcing an expanded expanded partnership where Bloom Energy will support the rapid build out of AI infrastructure and cloud computing as well. Oracle looking to procure up to 2.8 gigawatts of Bloom fuel cell systems under the deal. Now, previously, the first 1.2 gigawatts was already contracted and is already being deployed now through next year. So why does this matter? AI data centers, we know, use enormous amounts of power, so traditional electric grids can be slow to expand or just already overloaded. So this fuels the next generation. Bloom's fuel cell offer on-site electricity generation, faster deployment than waiting for the grid, reliable backup power, better support for the nonstop AI workloads. We know AI is just often nonstop. Oracle's doing this because they've been aggressively building out their cloud and AI business. So a big surge, adding to the advance that we saw in shares of Oracle yesterday. Shares of Oracle gained almost 13% yesterday. Today, adding another 6%, nearly 7%. Bloom Energy up 14% right now off the back of this, Nicole.
Oh, yeah, and a new high. Bloom Energy, the high 208.97 has pulled back a little bit, but you noted the 14% gain. I just pulled up a 3-year chart, but definitely a new high, at least multi-year high. Let's take a look at CarMax.
Yeah, CarMax, this one's a tough one because it actually did do better than expected, but there's not a lot of grace being shown to CarMax because, listen, profit and sales were still down on a year-over-year basis, so the stock is slumping 13%. Investors are just asking the question, what have you done for me lately? And it's clearly not enough from the viewpoint of investors. Adjusted earnings per share came in at 34 cents. That was better than expected. She was looking for 21 cents. Revenue coming in at $5.95 billion, also better than expected. But again, that's down on a year-over-year basis. Revenue down 1% year-over-year. Investors are focused on slowing fundamentals here. Sales are still soft. Retail unit sales fell 0.8%. Comparable store used unit sales declining nearly 2%, off 1.9%. You see that decline in gross profit off by more than 9%. CarMax seems to be using lower prices to stir up demand here. It's good for customers, but it's tough for margins there. Their wholesale business was mixed. Wholesale unit volume rose 3%. That is a positive sign. The street is not paying attention to that overall because you also want to keep in mind average wholesale prices actually dropped about $270. So that pressures revenue. Gross profit per wholesale unit also fell. More cars sold on both the wholesale side and the retail side, but at lower profitability. So it just highlights this ongoing reset they're having. They have this new CEO, Keith Barr, who took over in March. He says execution and efficiency are top priorities, but from the viewpoint of investors, not executing well enough, clearly. And you recall that Starboard had recently disclosed a stake. So there's some activist investor activity around this one, Nicole.
So they did cut prices to bring the customers back, but this new CEO, they said, that you just mentioned, has some work to do.
Yeah, he does. Work cut out for him.
All right, down 14.25% now. How about last but not least, we look at J&J.
Yeah, J&J. We'll continue to watch the investor reaction because they did do better than expected. Shares a little soft this morning, off by 0.5%, but look, it's been an outperformer year. To be an outperformer. The top first adjusted EPS coming in at $2.70, revenue coming in at a touch above $24 billion, so both the top and bottom line better than expected. They also raised their full year outlook. They had strength in the cancer drug Darzalex and its psoriasis treatment. They had strength there. That helped offset a sharp drop in Stelara. That fell about 60% because it lost patent protection. So there have been some worries about, okay, once that patent cliff hits, what does the rest of the pipeline look like? So they did actually offset it. They did do better than expected. They also had solid growth in their MedTech unit, medical technology unit. Again, there was some general strength that helped offset that Stelara patent cliff. It's still a watch item for investors here. Not enough to cause serious damage to shares. Look, we're seeing shares almost recover in real time right now, Nicole.
Yeah, raising the quarterly dividend, too. People like that. Yeah, you just said it. Recover in real time, and there it is. Now we're up 0.5%.
Yeah.
Diane King Hall, making news. Thank you so much, Diane. Okay, coming up, folks, we'll take a look at some of the technical trends here on Wall Street. Stocks to watch. What things could be poised.
The economic results, countries that have more breadth in the retirement system
While others recap the news, I help you read between the lines from what's moving markets to what's next with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall and connect with me on LinkedIn for more.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Welcome back to Opening Bell. Joining me right now, Mario Lagana, Head of Technical Analysis, Senior Institutional Equity Trader at Roberts and Ryan. I'm so glad you're with us. How are you feeling about this market, which in fact has now turned positive for 2026? Is that what you anticipated?
Good morning. Thank you for having me. Yes, the last couple of weeks have been very positive for the market. We've had the S&P and the NASDAQ put in a nice bottom. Then we had a big follow-through day, gapping through the 200 and the 50-day moving average. That's very powerful. We did close above those levels, which are both now support levels. Last week, we did see some higher volume, so that's telling us that there's some big institutional sponsorship buying into the rally. There was some short covering, but since then, we had multiple follow-through days this week, and you see that evidence in the volume that the institutions are participating, and people are still scratching their head, why is the market going up? We think we're poised to go a lot higher from here.
Understood. So what kind of moves are you going to be making between now and the end of the year?
Well, I mean, the market seems to have made a decision that everything that's happened in Iran so far, it's comfortable with. So you're seeing these follow-through days. I believe that we'll, test the highs, possibly break out, maybe have some single-digit gains into the end of the year, as long as, nothing crazy happens with the news. But so far, the market has been taking all this news in stride, and it likes what it's seeing down 6 or 8 months down the line. So that's a big positive for me when you see that type of reaction. Also, when you see a lot of down days that are closing on higher days, that's a big signal that people, are comfortable with this market. There are a lot of people that were mispositioned, and they think the market was going to go lower, but it's seeing that a lot of these stocks are all poised, and you're seeing the market leadership broadening into different sectors outside of AI and financial. So that's an encouraging sign also.
Can we talk a little bit about the technical analysis? What are you watching most importantly, whether it's on the day-to-day or on the longer trends and moving averages?
Well, we concentrate. Well, when the market was in a downtrend, when we hit bottom a couple of weeks ago, we concentrate on the 10-day and the 21-day. And once the market recaptures and regains the 10 and the 21-day, we then turn to the longer term 250, the 200-day and the 50-day moving average. So as long as we base and hold above that 50-day, that's a good sign. I feel that we're going to consolidate here, and if we stay above those levels, we are definitely positioned to go a lot higher.
What stocks jump out at you right now?
Right now, I'm watching Comfort Systems, FIX. It's building, air conditioning, and heating products. The chart has a lot of institutional sponsorship, a sign that real estate and building is poised to move higher. There's a big demand for that, even though interest rates are not coming down. We are watching Garmin. They make global positioning and navigation systems. That chart looks really, really good. It's close to its all-time highs. We see institutional sponsorship. Short interest is down. We've seen big volume in the stock. So those are all positive signs. There's no overhead resistance, as you see on the chart. And if you had volume, you would be able to see that you're following what the big institutions are doing, and that's a big sign when you see that in the footprint of upside by volume. The other name we're looking at is Quanta Services, PWR. It's heavy construction. Again, in that group, that looks really good. It's formed a positive chart base, and that's poised to push higher. There's a little bit of a short interest there, so there's no overhead resistance. So if shorts are forced to cover, it could add to the upside momentum also.
Yeah, so you said earnings should remain resilient. The growth for 2026 really could re-accelerate, and that's sort of your base case, right? Thank you so much, Mario. Appreciate it. Good to see you today. Mario Lagana, head of technical analysis, senior institutional equity trader at Robertson Ryan. Coming up, a quick look here at some of the key levels to watch, because we have our Kevin Green taking a look at the charts of the S&P and more. Opening bell. We'll be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Another winning day here on Wall Street. You are seeing some up arrows. Welcome back here to Opening Bell. I'm Nicole Petalides, and I'm so glad you are with us. So joining me right now, senior markets correspondent Kevin Green is taking a look at some of the key levels to watch. This as the major averages I was looking, right? We are now in the green for 2026. Let's see what levels you are watching this morning. I think you're looking first at the S&P 500.
I am. Good morning, Nicole. Yeah, we are seeing a breakout to the upside here from this bull flag pattern that we actually highlighted early on this year, which we did break to the downside here. As you talked about, we did recover. Now we are positive on the year, and now breaking above this resistance zone. You'd like to be able to hold this here and not really have this kind of look above and fail scenario. And maybe if we are able to continue to move higher here, Nicole, you could talk about that 7,000 level being in the crosshairs. We're only about 80 points away from that at this point in time. Not sure if we're going to hit that today, but something to keep on the radar. For the levels that I'm focusing on for today's price action, we're actually getting close to the upper end of resistance. The 69.30 level is where we saw the majority of the calls being transacted this morning. That could act as an area of resistance. But what we saw also yesterday is that area of resistance kind of created a little bit more of a catalyst, or this kind of squeeze type of buying activity that took place. So we'll see how this actually pans out. To the downside, first area of support, 6,900, and then below that, 6,850. You are starting to see a compression when it comes to these levels, both to the upside or downside, and that coincides with the volatility index moving lower. It's right now at around an 18.25 VIX, so we're implying about a 1.15% move to the upside or downside. So a pretty decent start to the session here. Like to see it actually broaden out here, not only just in mega cap tech, which is obviously leading the way, but you like to see a broadening taking place, and that would give you a little bit more confidence that this move can sustain itself.
Understood. How about silver? You're looking at silver. I saw the dollar coming down. Gold was higher. What are your thoughts on silver today?
Yeah, dollar is moving a little bit lower here. It looks like it is breaking a trend and trying to retest some of those lows, or the trajectory is that it wants to retest some of those lows. But if you're looking at silver, this is actually an interesting setup. We did actually make lower lows if you're just looking at bottom tick on the intraday basis. But we are now actually breaking out to the upside, broke a resistance level, this downtrend area, and now testing the 50-day moving average. If we are seeing equities moving higher, that's also going to lead silver moving higher as well. This optimism that global growth could actually kind of restart here if we do see a resolution to this particular conflict. That should also then lead to not only this higher inflation, which we are seeing right now, but also increased demand from an industrial standpoint, which also is getting impacted right now because of the lack of supply for certain materials. So keep your eye out on silver. We break above this, you're looking at the $90 level as your next major area of resistance.
All right. Thank you so much, Kevin Green. Great to see you. And it's time for our market meetup panel. Joining me right now, Alex Coffey and Dan Grant, Senior Specialist Retail Trading, Charles Schwab. Good to see you both. Alex Coffey, some of your thoughts on the market action, the up arrows that we're seeing?
Yeah, really nice start to the day so far, Nicole, building on the strength from yesterday. Of course, a nice turnaround from the opening weakness that we saw on Sunday night. Seems like the updates that are coming out of the Middle East, so it's still choppy, but for the most part, moving along, which I think is positive. I heard an update on the radio this morning suggesting potentially a second round of talks could begin again in Islamabad as soon as Thursday. So if the vice president and that group is able to get back out there and continue talks, perhaps a resolution is sooner than later, which would be one risk factor off the table. Earnings so far, 72% beat rate through 5% of the S&P 500 companies. Aggregate earnings growth, Nicole, of over 35%. So off to a really, really strong start, even though it's early in the earnings season.
All right, Dan Grant, your thoughts this morning.
Yeah, hard to not just look at these indexes and watch some of the stocks just going straight up. Amazon is one of the stocks that is really performing well here off the lows. Crude oil is making a confirmation that they're kind of de-escalating this a little bit. I'd like to see it down in the 80s before I would say that there's going to be a positive resolution on that. The Strait of Hormuz, actually, it's kind of still of a emerging situation, so we don't know if that's actually going to be blockaded or what's going to happen there. Bond markets had little or no reaction from this. Bonds and notes down less than 5 basis points over the last week. And it's really been a kind of a story of, we're fighting a war, we have full employment, and we're pushing demand. That should have an impact on long-term rates, and it really is not right now. So that bears watching. Look for a spike above 5% on the long bond markets to see if we do have an inflation scare. And we've got Fed coming in at the end of the month.
Yeah, I was just looking at some of the movers here. I mean, Wells Fargo is the big laggard in the S&P 500. We did have quarterly reports from Wells Fargo, BlackRock, JP Morgan, Citi, and that is the laggard on Wall Street. When I look at the S&P winners, Ford is in there, and Goldman Sachs actually adjusted Ford and did actually put a $13 target. But UBS is more positive with a buy rating and a $15 target, and that stock's up 4.25%. Alex, what else are you watching?
Yeah, Nicole, one other thing, too, as Dan mentions the Fed, one of the risk factors is sort of the uncertainty on how that kind of changing of the guard may take place, what the timeline would look like. Some of the reports out of Washington, Punchbowl in specific, suggesting that things are moving along with Kevin Warsh and the potential nomination hearing coming up. So that's a positive update for at least just a less uncertainty on that front. One way or another. And then we're talking about earnings. As we go ahead and look ahead into the next couple of weeks, we'll start getting some of those tech sector earnings. Thought it was interesting, given the move that you've seen with price coming down for many of these tech names. You think the Microsofts of the world, even NVIDIA, still quite a bit off its highs. The IT sector, from a forward price to earnings ratio basis as a valuation tool, basically back to 2022 levels on a forward basis. So you're not as elevated going into this season as you have been in recent years, which may actually set up for a situation where the bar is seeming a little bit lower, and these companies might actually exceed and be rewarded for it.
Yeah, and I think it's also worth noting that Bitcoin's above 75,000 today for the Bitcoin folks who like to see that month to date up over 10.5% basically. Dan Grant, some final thoughts?
1 year on from the tariff scare, right, from the Freedom Day from 1 year ago. Had some accounts in a lot of trouble a year ago. A little different picture this year.
I also think that we have a little time, and I just wanted to say, sometimes we say Merger Monday, Merger Tuesday. We have a lot going on. You have Amazon acquiring Global Star for $90 a share. You have Oracle and Bloom Energy. Bloom Energy's at some new highs, recent highs at least, for sure, multi-year high, 14% higher. And Oracle's had an incredible run, right? That's up 7%. And last but not least, the airlines, with the talk of United Airlines possibly merging with American Airlines, Alex. So maybe instead of Merger Monday, we say Tie Up Tuesday or something.
Yeah, no doubt. What I would also say, too, is I thought that story in the healthcare space with Novo Nordisk partnering with OpenAI, look, it's still early days, but AI is seeping into every aspect of life, and it's seeking to make things more efficient. I don't know what the ultimate outcome is going to be for labor markets, et cetera, but what it is doing is it's accelerating timelines. They're going to use that to better potentially, get their drugs to potential targets for them, but also to improve the analysis, to improve the QA work that they're doing. So it's exciting times we live in, Nicole, as uncertain as they are.
Yeah, and Dan, as we look at the 10-year bond yield, 4.30, a lot of talk about it going back down to 4.1. Have you heard that? 4.1%.
Yes, absolutely. I think it's going to go to right around where the 5-year note is. That's the kind of the target. So as low as 391 is kind of where it could collapse to, or not collapse, but go down to.
Right, understood. All right, gentlemen, great to see you both, Alex Coffey and Dan Grant. Thank you so much for being with us, folks. We'll continue to follow all the breaking news here on Wall Street on the play-by-play. Let me just see if there's anything else that I want to add in the last 60 seconds of this show. Right now, the Dow's up 121 points, so we are at the session. No, not quite at the session highs, but certainly looking good here. And you have the S&P up 33 points. Thanks for being with me here on Opening Bell. I'm Nicole Petalides. I'll see you at 2 o'clock for the new watch list, which is really AI and crypto-based, a lot of tech. So see you at 2 o'clock, folks. Morning Trade Live with Sam Vadas is next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Schwab Coaching is concepts brought to life in the real world.
Schwab Coaching is learning constantly.
It's relatable, it's practical,
clear, understandable,
and hopefully entertaining.
Take it for what it's worth, but I think it's absolutely world class.
Schwab Coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry and around the industry for a long time.
So the nice thing about Schwab Coaching is that clients get access to 9 different sets of expertise.
We want to engage with you and chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade. So we shall see.
We have different formats because people learn differently at different times.
If somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
We've got this ongoing 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education.
It's really unique, not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that? And it's free.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Welcome to Morning Trade Live. I'm Sam Vardas, live from the floor of the New York Stock Exchange. We've got plenty to hit on both here and abroad over the next hour. Here is a look at what is coming up. We will dive into the big picture surrounding the continued conflict in Iran and how the U.S. blockade is impacting the energy sector. Over the next hour, we'll have example trades for Citigroup and ExxonMobil. Citigroup is, I believe, higher this morning after reporting earnings, and Exxon is also in focus amid continued conflict in Iran and the U.S. blockade of the Strait of Hormuz. So let's check in with these markets because we have now recouped the war's losses. So we have made back what we wiped out since the start of this Iran conflict. The S&P 500 managing to regain that sell-off and rallying into the close yesterday, continuing to build on those gains this morning. 69.19 for the benchmark, up 0.5% right now. We've got the NASDAQ 100 powering ahead to the tune of 0.7% as well. In fact, we have had the NASDAQ up 9 days straight. So technically things are looking pretty supportive. We'll get to KG to break down the nuts and bolts of that in a second. We've got the Dow Jones up 160 points right now, 0.3%, and the Russell 2000 outperforming here, up 0.8%, as of course we did have that significantly milder PPI coming through this morning. What's that going to mean for the inflation picture? We will discuss that throughout the course of the program. Let's see how foreign markets are faring. Of course, Europe Europe currently still trading and looking like this. A nice risk on there for the DAX. German stocks up 1.2% right now. We're seeing some marginal gains being put on over in London as we are approaching this final hour of trade out there in that part of the world. And a nice session out in Asia last night. The Nikkei 225 up 2.5%. We saw some solid demand for a 20-year bond auction out there, and the Hang Seng Index up 0.8%. We've got some trade numbers to get you across throughout the course of the program and some other international stories that we are tracking. But for now, let's take a look at futures products because, as I mentioned, we did have that data out this morning with the PPI up 0.5% versus the 1.1 that the market was expecting there month over month. The 10-year yield currently sitting at 4.30.
Let's give it a spin. Spin, spin, spin. What's it? Is it not working? Should have been an hour. Well, right command. Not working. No spin. Not working. The hell? The hell, Bobby? Okay. Well, I guess it's not spinning. I don't want global. Yes. Did the Botrix fall asleep or something? Wait, I'll make sure that I'm not. All right, Botrix, you're failing, buddy. Nope. Not going to do it. Just not going to do it. Not going to do it. Nothing. Nothing. What the heck? What the heck, Bobby? All right, we're going back to Schwab.
Well, this is growing season when it comes to agricultural products like soybeans, corn, and even wheat that's already in the ground right now. That frost could actually impact production, especially starting off this year. And so those prices, on the back of energy prices moving higher, on the back of fertilizer prices moving higher, weather risk is going to be priced in at a premium as well, which is why we are seeing those grain prices moving higher. Let's see how long that frost lasts. But if it lasts for 3 weeks or so, this could be sustained levels or higher level of prices for grain products for the remainder of this year, for the remainder of 2026. Something to keep your eye out on, especially if you're concerned about inflation.
Yeah, I mean, who isn't right now? I suppose that's something to watch as well as far as some of the input prices. KG, really great analysis there. Thanks so much for getting us across the commodities patch for us today. Well, coming up, we will take a look at the factors in the bigger economic picture. Morning Trade Live will be right back after this.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Intern, this place is incredible.
It's where I get all your office supplies.
Your golf balls, your fancy coffee, your giant TV.
It's everything in one place. It's like
Schwab. Everything investors need, all in one place.
Come again?
Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
I think I'm gonna be sick.
We have to buy that now.
Schwab.
Invest your way with Schwab.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
We're back on Morning Trade Live. Amazon announced it will acquire Globalstar for $90 per share, enabling the company to add direct-to-device services to its low Earth orbit satellite network and extend cellular coverage to customers beyond the reach of terrestrial networks. As part of the agreement, Amazon will acquire Globalstar's existing satellite operations, infrastructure and assets. So the new capabilities are part of Amazon's long-term vision for space-based connectivity, and the transaction is expected to close in 2027. Amazon is rallying up 2.2% right now. Let's take a look at some other stocks on the move for us this morning. We've got Delta Airlines up 6%, Southwest Airlines also doing a similar thing. Of course, we do have some airline news reports about potential for mergers even. So this is obviously something that's catching a lot of attention in the market today. Coinbase rallying as we have got Bitcoin, cryptocurrency, well bid today in this sort of more risk-on mood in the market. Axon Enterprise there is leading the pack up 6.4%. Let's take a look at some of the losers on the session, see what is dragging on the S&P today. Wells Fargo off the back of its earnings out this morning. We had APA Corp down 4.5%, Occidental Petroleum down 3.5%, obviously, as we have seen this pullback in oil prices. WTI currently trading at $92 a barrel, and Akamai Technologies down almost 4% in the session right now. So there's some of the winners and the losers on this session, but we are broadly seeing a risk-on day at the headline level. Let's focus on the macro now. Joining us is Steve Odland, who's the CEO at the Conference Board. Steve, always a pleasure to speak to you. So we've seen this global repricing of oil, global repricing of rates, and now growth expectations. What are your GDP checks and recession checks telling you right now?
Yes, well, good morning. You know, the Conference Board has revised its second quarter projections based on what's going on in the Middle East, and we're projecting GDP to slow close to 1% in the United States. We're also projecting inflation to rise close to 3.5% in the second quarter. So this is going to feel very stagflationary during the second quarter. Now, if you can normalize the situation through the Strait of Hormuz, then we should see inflation coming back down towards the end of the year, towards the 2% rate, and you should see, of course, GDP rising back to the 2% plus rate. But we're in a situation where consumer confidence has been declining now for several years, and it really is based on the concern over inflation. Now, typically you see worries over jobs, which considerably has stabilized, and that's unusual in this kind of environment. But that's good. The bad news is inflation. And oil, even though it's affecting the Middle East, it's a global trade, as we all know, and it's affecting almost 6,000 different products in the United States alone. And inflation continues to ripple through those markets. So the consumer is paying more, their wages are not keeping up, and so you're seeing a hit on GDP as a result.
So then what is the long-term impact of that if you do start to see some demand destruction with respect to these concerns about gas up over $4, grocery prices up as well, not to mention mortgage rates above 6%, just at a time when we were hoping and really banking on some sort of meaningful turnaround in the housing sector? I mean, then what happens inevitably? What's the sort of policy prescription here?
Well, first of all, you have to get the Strait of Hormuz open. It is such a narrow little thing, and you say it's one little spot in the world, but it right now has frozen the global economy. It's very unusual, but it has really demonstrated the importance of getting trade flowing through that. Once that starts to happen, it's going to take many months to catch up over that period of time. And if you can keep that the security in the strait constant, then you should see a normalization by the fall or the winter. But there are a lot of ifs in this, and you still have a few other nations with a say in this. But look, I think the U.S. consumer particularly is stressed. You see debt levels at all-time highs. You see student debt at all-time highs. You see credit card debt at all-time highs. So you're really maxed out on the debt side. And, you know, wages they're okay, but they're not keeping up with inflation. So that's what should impact GDP. And I think it's going to take probably until 2027 to sort its way through.
Yeah, I mean, it's remarkable that debt is at an all-time high, as you mentioned, while you've got the savings rate that is also pretty low at this point too. And then you have all these consumer worries about sort of kitchen table issues, you know, with trying to make ends meet, as you point out. Then how are the companies then feeling about this at the moment, Steve? I mean, and their ability to absorb it and eat it in their margins, and how much flexibility they actually have in this environment to pass it on.
Well, you know, the CEOs that belong to the conference board tell us that it was bad enough dealing with the supply chain and the tariff issues where they were trying to deal with the increased costs, and they're eating some of it in their margin, passing some of it on, which is driving the inflation. Now you add this on top of it, and so it's layer upon layer of uncertainty, and, you know, they're not investing. And that's the biggest thing. They're kind of frozen here because the cost of debt is relatively high. They don't really know what their cost of debt is going to be long term. The Fed is sitting here in neutral, as we know. So you have a situation where CEOs have put a lot of money out in AI, but they are unable to really move because of all of this chaos going on. So they're not investing in CapEx. They're holding on to jobs, which is a good thing. But that's impacting, you know, capital deployment as well. So you add that to the situation with consumer confidence, and, you know, we're just stuck in neutral, and that's not a good place for the U.S. economy to be. Now we have a backlog here. So if we can get this resolved relatively quickly, we should be able to burst the dam, get normalized trade flows back, and hopefully get through this by the end of the year.
But then what do some of the uncertainties mean for their hiring expectations this year? Because it feels like a little bit of a double whammy where, you know, companies' hands are tied, they're not able to employ more people. And then, as you say, as it's a result of AI, where you're seeing companies having to shed workers because of that technology. So you feel, you get a sense that it's only a matter of time before the pendulum swings the other way from the inflation fears back to the jobs market. But just talk us through the expectations this year.
Yeah, well, you know, the job market is remarkably stable, and I think part of that is the learning coming out of COVID, where people immediately, you know, laid off a lot of people, over millions of jobs lost, and then they couldn't get the people back, so that they lost talent, and that really set them back strategically. So they're really hoarding talent in their companies today. So the layoffs are not there. Even with AI, if you listen to what CEOs are saying, on those companies that are doing layoffs, they're saying it's in order to cut costs to be able to afford the AI. It's not because of AI directly impacting the jobs as much. There is some of that, yes, but there are also AI created jobs. So that's pretty much in balance here. But I think people are really looking to deploy AI more rapidly. I think they're looking for you know, for a return on this investment, and that's the focus right now from CEOs. So I think stable, the job market is relatively stable, which is a very good thing in this kind of uncertain time.
I think we can take some comfort in that, as the Fed has to, of course, then focus on the other side of the dual mandate, as we just have no idea what's going to happen with this war. Steve, always a pleasure. Thanks so much for joining us today. Catch you next time. Steve Odland there, CEO of the Conference Board. Coming up, we will get a closer look at the big picture with the team over at Charles Schwab. Morning Trade Live. We'll be right back.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
First day, so...
Sometimes, you know...
Next. Try it again?
You could have done better.
Please?
Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network. Morning Trade Live. Novo Nordisk announced a strategic partnership with OpenAI that it says will place Novo at the forefront of AI transformation in healthcare and help the company bring new and better treatment options to patients faster. The partnership will apply advanced AI capabilities to analyze complex data sets, identify promising drug candidates, and reduce time required to move from research to patents. So pilot programs will launch across the company with full integration by the end of 2026. So that is giving Novo Nordisk shares a nice injection today, 2.5% high. We're trading at $38 and change. So obviously we've come a long way off those highs, but of course slowly making our way back up there off the back of some of this news and other tailwinds in this space lately. So that's a good look at Novo Nordisk this morning. Let's move on and welcome in the team from Charles Schwab. We've got Michelle Gibley today, Director of International Equity Research and Strategy, and Mike Townsend, Managing Director, Legislative and Regulatory Affairs from Charles Schwab. So Michelle, let's just begin with you, because you say the economic fallout from the war is yet to come. Obviously, we got those Chinese export numbers out last night, which didn't look too great. No doubt that is a key barometer for global demand. But what metrics do you look at for an indication of any hit to growth in the global economy?
Yeah, we did get those Chinese exports. They rose less than expected. They were dampened by the timing of the Lunar New Year. And actually, they were benefited by China's position in the supply chain for AI and tech. The value of their semiconductor exports surged 70% in the last 2 months, and electrical equipment rose 50%. But we're still going to see a slowdown in economic growth in coming weeks and months. In fact, we could already be seeing some demand destruction on the way, because we still don't really have the Strait of Hormuz opened, and physical supply of energy is constrained. So companies and countries are going to need to pay elevated energy bills in the coming weeks and months.
Okay, and Mike, obviously Congress getting its feet back under the desk this week after their break there, and coming back to obviously news of the ceasefire, the blockade. We're expecting more talks in Pakistan, I believe. They're saying this Thursday. Just run us through the nature of some of the conversations as they've, obviously got back to work this week.
Yeah, great to see you, Sam. It's an interesting time. I think Congress is coming back pretty grouchy, frankly. They have been home for 2 weeks. I think they've gotten an earful from voters about their concerns about the war, and obviously most specifically about gas prices. Gas prices up more than 21% in March alone. For a lot of people, everyone knows what they paid for a gallon of gas, and for a lot of people, I think gas prices are sort of a proxy for how the economy is doing, and so that's a real negative, I think, on policymakers of both sides. I think Congress is coming back wanting to hear more specifics from the administration about what's the goal here, what's the timing on getting the Strait of Hormuz open, what even constitutes winning this war, and that's going to be something they're really demanding, I think, from the administration. The other thing that's looming is that the administration is asking for funding for the war effort, and so you're going to have some tricky votes ahead. Pentagon originally asked for about $200 billion. I think the White House is going to scale that back to half or less than half that amount. Still a really large amount for Congress to have to vote for, and that's coming up probably in the next couple of weeks. So we'll be watching that too.
Yeah, it's hearts and minds, isn't it, when it comes to those gas prices? I mean, I was just talking to the conference board about that, particularly because it's, how you spend everywhere else and how you feel, how you vote as well. Michelle, getting back to you, obviously now markets get to turn their attention back to the fundamentals and obviously the corporate read on how these companies are feeling about the war over in Iran. Just give us a little bit of perspective on not just here in the US, but how earnings estimates globally have been increasing and what we're starting to hear coming through from some of these international firms.
Yeah, I think it might be surprising for investors to hear that estimates have actually been increasing since the start of the war, and that's not just here in the U.S. It's globally. And stocks are really, like you say, now they're turning toward earnings season. It hasn't really started overseas, just barely started here in the U.S. But over the past month, the earnings estimates, the upward ones are mostly in the tech sector and energy sector. No surprise there. But really, they've been outside of the energy sector, really more due to corporate updates. And so analysts aren't trying to get ahead of the game here. They're waiting until earnings season happens and then decide what they hear from companies. Will companies guide down or up? And that will likely depend on their pricing power, how much they can pass along those higher input prices or have to absorb it into the profit margins. One area that we do like is industrial companies related to the demand for power from AI and electrification, because it's a long-term theme that kind of outlasts this uncertain near-term economic backdrop.
Yeah, it's interesting because we've already had a little bit of that sort of guidance coming through depending on what company you are. I mean, Samsung is expecting a record coming through for this quarter. I know that BP, Shell have also been talking about oil trading performance as well off the back of these higher prices. So it's going to be a very interesting earnings season, as you say, Michelle, depending on who you are. Switching back to Mike now, and obviously we're all waiting for this confirmation, a bit of an update on what is going on with Kevin Warsh. We know that one of the roadblocks is obviously Thom Tillis. Just walk us through where we're at in this process and when we can expect to get some sort of update here.
Yeah, well, there's news this morning, Sam, that the confirmation hearing for Kevin Warsh to be the next chair of the Fed is going to take place on Tuesday next week, so Tuesday the 21st. And that'll be, there'll be a lot of questions asked of him, particularly around his plans to try to lower rates quickly, as the president has called for. But as you noted, Republican Senator Thom Tillis from North Carolina has said he's fine with the confirmation hearing, but he's still blocking a vote on Kevin Warsh until the criminal investigation of Jerome Powell is resolved. The Senate Banking Committee chairman said today that he thinks that that investigation will be resolved quickly in time to get Warsh confirmed before Powell's term as chair ends on May 15th. It's a really tight timeline, and Powell has said that he'll stay on as temporary chair if Warsh is not confirmed by May 15th. There's rumors that the White House may try to challenge Powell if he does that. So I think there's more intrigue to come. But Sam, it's really important to remember that even if Warsh is confirmed tomorrow, he can't magically lower rates by himself. The FOMC has 12 voting members. I don't think anywhere near a majority of them is thinking about lowering rates anytime soon. So he's going to have a hard time sort of convincing other members, I think, that they should act quickly.
We covered a lot of bases, guys. Thanks so much for joining me today. Really appreciate both of you on the show. Michelle Gibley, Director of International Equity Research and Strategy, and Mike Townsend, Managing Director, Legislative and Regulatory Affairs at Charles Schwab. Coming up, it's time for the Morning Trade, and we will take a closer look at Citigroup after reporting earnings this morning. Morning Trade Live will be right back.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Trade Live. Let's focus on Citigroup this morning. The bank is up over 100% from the 52-week low almost exactly a year ago and is up at 10% this month alone. So here's a look at the chart. We're sitting up almost 1% in trade right now off the back of these earnings, which we'll break down in a little bit. But we are up this morning in trade because, of course, we did have a particularly big beat across fixed income, currency, and commodities. So let's break down this report and some of the reaction we're seeing with Marley Caden. Very good morning to you, Marley. Just walk us through what we got here and the reaction we're seeing for Citi.
Good morning, Sam. Yes, certainly a different picture than what we got from Goldman Sachs. Not in that they didn't beat on the top and bottom line, but the reaction really, and also that fixed income number that you just mentioned. So as you said, they are trading about 1% higher this morning. Citigroup was also the leader in terms of the big banks going into this earnings report. The only one holding firmly in positive territory ahead of this report so far year to date. But as far as the numbers that they put out, earnings per share came in at $3.06. That was better than the $2.65 estimate. Also 56% year over year increase in terms of that EPS number. Revenue also jumped to $24.63 billion. That was better than the estimate, also marking the best quarterly revenue that Citi has seen in a decade. Another big number that's helping drive this move to the upside, according to the analyst notes I've read so far, is their return on tangible common equity. Now, this is generally thought of as a measure of profitability for the banks. That came in at 13.1%. That's its highest since 2021, so since post-COVID, and above the firm's goal of between 10 and 11%. CEO Jane Fraser did say the bank is on track to hit that ROTCE target between 10 and 11% for the year, and also commented on the firm's streamlining process that it's been completing, saying, quote, "We've entered into the final phase of our divestitures, and 90% of our transformation programs are now at or near our target state." So Citi has been in the midst of not a turnaround, but we'll call it a restructuring, a streamlining here, and it's almost completed. And so they have had relatively low valuations, in part because of that turnaround restructuring plan, but that has also allowed it to be the best performer year to date. And it's also been working through several regulatory consent orders as well, Sam, that the CEO commented they also expect to complete this year. So some positive news there. But you mentioned that big number, their markets division was a big driver of that first quarter beat. That fixed income division gained 13% to $5.2 billion in revenue. That topped estimates. Equities jumped 39% to $2.1 billion. That also topped estimates by more than $500 million. And that was the different picture than what we got from Goldman yesterday. Their fixed income number was a miss, while their equities number came in at a record. Investment banking for Citi did come in a little bit light compared to estimates, though, except for equity underwriting. That beat estimates. That unit comprising services showed that revenue increased 17%, and services revenue also exceeded expectations for $5.8 billion. Their wealth and consumer cards segment was reconfigured during the quarter, so they're not comparable to estimates. That number is not worth comparing, although they did see gains thanks to Citigold and retail banking. Also important to note, their provision for credit losses was a bit higher than expected, Sam. Came in at $2.81 billion versus the expectation for $2.64 billion. That was due to net credit losses in consumer cards and allowance for credit loss build of $579 million. Also important to note, Citi's expenses were higher by 7% due to severance and foreign exchange translation. And the thing I keep seeing pop up in a lot of the commentary I'm seeing is that Citi is just generally perceived to be more impacted by the current geopolitical environment than many of its peers because of its international exposure here. So something to keep in mind if you're looking at Citi, but all in all, a good reaction to some strong numbers, Sam.
Yeah, makes sense. A bit mixed, but as you say, I mean, those traders just seem to be knocking it out of the park at a lot of these banks, and you can probably have the volatility we've seen in the last quarter to thank for that. So really interesting. Thanks so much, Marley, for breaking down the details of the report we got this morning. So let's trade the name now with Tim Bigham, options strategist, Pilot AI. Tim, very good morning to you. How would you approach an example trade for Citi this morning off the back of these earnings?
Yeah, good morning, Sam. And looking at a stock that absolutely, crushed earnings on both the top and bottom line here, as you alluded to, most of it due to probably some outsized trading gains, which those are certainly not repeatable perhaps here. So I think that's why you're seeing a somewhat muted upside response to the stock here, given the size of the earnings beat here. So I'm just looking to kind of position to maybe be a buyer on a pullback. Given the rally in the overall market as well, I think stocks and Citi especially has maybe gotten a little ahead of itself here. So I'm taking advantage of still what I perceive to be somewhat high implied volatility, even though it's softened, going out to the June options, selling the out of the money 115 puts, hedging by buying the 110 puts, bringing in about 85% net credit. So like that return on risk of about 20%, plus give about a 10-point downside cushion on Citi from where it's trading at now. So I just kind of like stocks on the lows with the VIX at the highs right now that the VIX has come down sharply and stocks have rocketed. Stocks becoming less appealing to me is certainly from a options trader standpoint. So I'm cautiously, I guess, neutral, if you will, on Citigroup and the market here, and getting paid to, be a buyer on about a 10-point dip, I think is the way to play it.
Okay, great stuff. Tim Bigham, as always, thanks so much for the example trade. That is the options strategist over at Pilot AI joining us here on the program. Coming up, we will take a closer look at the sectors on the move this morning and some of the international headlines impacting global markets. Morning Trade Live. We'll be right back.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Vardas coming to you live from the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning. So Alex Coffey is here to break down what he's seeing beneath the surface. What stands out today, Alex?
Yeah, pretty green day here, Sam. Good morning to you. Only 4 sectors in the red. Energy clearly the laggard. Not a surprise when you have WTI crude in May down $5.50. About 60% of the S&P 500 components are higher. Communication services, discretionary, and IT all leading the way. One could argue those are the 3 most important when it comes to a beta and performance standpoint for the equities. You see a lot of those big boxes green today, Sam. It's usually a recipe for some success.
Yeah, absolutely. And I am seeing it is a nice day for softwares as well as some of the chips, although you do have some of those names coming off. Intel stands out to me because it looks like it's going to snap now what could have been a 10-day winning streak, which I believe takes us back to like the early 2000s. But just walk us through any of the sort of individual price action that sort of stands out to you today.
Yeah, what stands out, I think, most notably is, well, earlier, before we came on, you had 7 for 7 of the Magnificent 7 names higher. But what really, if you look at it more of sort of the overlooked stocks within the S&P 500, it's really sort of a bounce back for some of these names that had been, a little bit underloved, let's say, recently. Coinbase having a nice day. Supermicro having a nice day. Oracle having a nice day. Not that Oracle is overlooked by any stretch, but what you're seeing, Sam, is some of the names that were really beaten down the most over the last couple months are really leading the comeback here as the market's starting to get its footing.
Yeah, and it's interesting because Liz Ann puts out these charts each morning, and I caught one of them this morning that actually showed how US megacap had been back in favor after obviously a few weeks of not being very much well loved as we've previously seen. But it feels like with some of the brokerage calls, I don't know, I mean, Citi upgrading US equities to overweight, BlackRock upgrading US and EM to overweight, that we're almost going back to the pre-war playbook. I don't know. I mean, the Taiwan markets at a record last night thanks to TSMC. It looks like, Asian AI is back in vogue. Anything sort of stand out to you on that front?
2 things. One, should we be surprised by that? I mean, this is essentially the playbook of every geopolitical conflict of the last 50 years. This is how markets react. They react very negatively, and then they stabilize and they move on, and maybe that's what we're seeing. Second thing I'll leave you with, Sam, IT sector of the S&P 500 on a forward earnings basis got down to the 2022 valuation levels. So despite the fact that the market's trying to stabilize, because there was some price pressure lower, and some of these names certainly haven't all the way recovered. Look at Microsoft, for example. It actually sets up a pretty interesting moment for this earnings season, where some of these names for the first time in a while really aren't super expensive relative to where they've been.
Yeah, I mean, they've certainly been on sale. I mean, Dan Ives had been pointing that out as well over the last couple of weeks too. Alex, really appreciate it. Thanks so much for the breakdown. And international stocks, these ADRs also catching a bid today. Chinese stocks are also rallying, and that is despite a report that Beijing is planning to fine multiple e-commerce platforms over safety concerns involving food delivery. Now, according to the Nikkei Asia, Pinduoduo is expected to be hit with the hardest, about $219 million. Alibaba and JD and Meituan are also facing charges as well. Authorities reportedly want the companies to be more responsible with food security on their platforms, but investors seemingly looking past that report today. Trade numbers out of China overnight showing a sharp slowdown in exports, rising just 2.5% in March year-on-year. Imports, which are a key sign of domestic demand, rose.
Rates at Earth. Core inflation running around 0.2. If you look at the 6 months average of core, it's the lowest. Which also hit a new high in the session. It comes pre-war
playbook of piling into Asian AI stocks. The TAIEX up 25% or so just this year. And we saw a record 10-year bond sale over in the UK today. The notes handing investors the highest yield since 2008 during the global financial crisis, and a 20-year note auction in Japan today also drawing the strongest demand since 2019. No doubt investors chasing those high yields. Coming up, it's time for Inside Out. We'll take a closer look at the energy sector and bring you an example trade when Morning Trade Live returns.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Morning Trade Live. Here's a look at the energy sector today. No surprises that we're seeing a sea of red out there, with WTI currently trading at $93 a barrel. So obviously we are moving in tandem with those oil prices coming off as the rest of the market is rallying. But energy very much underperforming today, and some of the usual suspects are those in the business of oil, very much subject to those prices. So let's go inside out on the energy sector. Joining us now is Jeff McLean, who's the CEO of Solidarity Wealth. Hey, Jeff, so nice of you to join us. So as I said, no surprises that energy is lower today. But the story for this sector is that the long-term narrative remains intact. Just walk us through your thoughts right now.
Yeah, I mean, I think right now you're seeing a lot of whiplash, obviously, in the sector, depending on the news coming out every night from the Iran crisis and the negotiations there. But on a look-forward perspective, you've seen significant movement. Obviously, gas prices are up 40% as we go into the travel season for Americans here in the U.S. going into the summer. That's going to impact travel plans associated with that. They're at a 4-year high, the average gas price across the country. You have the price per barrel that has increased 60% year to date. And so you're seeing significant shifts. Now, with that said, as this resolution comes to a head, whatever that may be, we're halfway through a ceasefire, into a 2-week ceasefire. If they come to a resolution, you're seeing the result of what would happen, which is today, the majors are trading down, as you just showed. Oil is trading down. I think it's down about 4% so far today. And so you're seeing movement back. That's kind of the bad of like, hey, this got out of hand. The good is what we saw yesterday. Even over the weekend, we saw that the deal kind of fell apart. Negotiations have to restart. But even with that, we had a bright green day yesterday in the market. We had oil trade down, and the market's less and less spooked about this. And so from a go-forward perspective, energy as a long-term isn't going anywhere. And not just oil and gas, but all sorts of energy. The needs are real and long-term. That energy trade is going to continue to stay intact. But the extreme whiplash in oil prices, I think, as we come to a resolution here, at a minimum, hopefully by Memorial Day, whatever happens, you're going to see the market continue to boom and take off as oil prices come back to their normal range.
Right, and I suppose underscoring that is what you're seeing right now with Bloom Energy, for instance. Just been reading this morning about how, Oracle and Bloom have this sort of AI data center power deal. We've seen both of those jumping in trade right now. And Bloom shares soaring 20% in the trading session. Just walk us through that, because I know from an alternative energy perspective, this is a name that you would be looking at.
Yeah, it's been a wild ride. I mean, this is a perfect example of the roller coaster that's happened in certain narrow niches within the energy space. They do solid oxide fuel cells to power data centers. And so kind of a bring your own energy type of result. They have 12x year over year. That is wild. That is something that's hard to keep up with. However, their backlog is real. They're a $2 to $3 billion company from a revenue today. They have over a $20 billion backlog of contracts. And so their ability to grow to scale is going to be dependent on the management team and, of course, dependent on, do these data centers that AI need for fuel and for energy, does that continue, or is that interrupted as local municipalities, local populations fight back against data centers? There is obviously some risk associated with them. You mentioned the Oracle deal, an incredible deal for Bloom Energy. I will note, as shareholders want to keep in mind that as part of that deal, Oracle got a bunch of warrants in Bloom Energy, kind of the circular financing. But if you can catch the ride up here and these management teams can execute, all you have to do is look at that Bloom Energy backlog and say, that is going to be a really big company one day if that comes to fruition. So finding these, identifying them early, obviously as an investor, you'd love to have been in as early as possible since it's 12x year over year. But the music hasn't stopped. It's going to keep going with these. And there's a lot of real potential with the Bloom Energy type companies that initially start out as a kind of low end type of cap company in the small cap space, and then increase over time as these contracts come to fruition.
Yeah, I mean, incredible move today, up at 21% right now for Bloom. Hey, Jeff, really short and sweet today. We've got to park it there, but thanks so much for joining us. A really great chat. Jeff McLean there, CEO of Solidarity Wealth. Let's trade ExxonMobil now with Tom White, host of Fast Market. So obviously, incredible move year to date, and a lot of what Jeff had just spelled out with respect to what we're seeing with these oil prices. But even before that, I mean, the narrative was that we would see this commodities bull market. Just walk us through an example trade for us on Exxon.
Yeah, based on maybe what your guest talked about. I mean, we've seen that rally in ExxonMobil, but it's pulled back about 16% from those record highs that we saw. So maybe that gives you some opportunity. So I looked at an option strategy that takes advantage of maybe a further pullback. If you do want to buy the shares, it pays a decent dividend also. And you're going to be susceptible to what's going on in that commodity space also. So I looked at a cash secured put. It's a neutral to bullish type of strategy. Take advantage of the higher implied volatility levels. There May, so that might be a catalyst. But I went out to sell an out of the money put and the 140 strike put. Selling that, you collect a credit of around 225. It might be about 250 right now, but the credit you collect is what you can potentially profit on it. So if the stock doesn't move anywhere, goes higher, even goes a little bit lower, you just get to keep that credit that you collected. Now, if the stock does fall below that 140 level, that's about $8 out of the money to the downside, you'll have that opportunity to buy the stock at the break even. If you collect 225 credit, your break even 137.75 to the downside. That's about 7% below the current share price in there. So you'd be buying the shares at a discount to where it's currently trading on this one. The probability that that short 140 strike put that you sell will be out of the money at expiration, which is what you want. You want a high probability of success. It's about 70%. So in 3 out of 4 scenarios, you're going to profit on this one. Stock goes higher, stays where it is, or goes lower, remains above 137.75. But if it does fall, you've got to be prepared to buy the shares at that discounted break even of 137.75. So taking advantage of the pullback from those recent record highs, if you think it's going to at least consolidate, maybe go higher, but hey, you're willing to buy the shares if it does continue to fall.
All right, a good look at Exxon today, pulling back 3.5% alongside the broader energy sector as WTI has come off from those triple digits. Tom, always appreciate the example trades. Thank you so much. And just looking at these markets, we continue to build on these gains as, of course, the S&P 500 has managed to regain its war sell-off. We're at 0.8% higher, 69.40 on the benchmark. The Nasdaq 100 up over 1% right now, and the Russell 2000, the small caps, more rate-sensitive part of the market, is outperforming today, up 1.4% as we continue to track these lines out of Iran and hopefully some more talks out in Pakistan this week as well. Thanks so much for joining us here at Morning Trade Live. I'm Sam Vardis. Stay tuned. Trading 360 up next with Marley Caden.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caden coming to you live from our Chicago headquarters. We've got a lot for you coming up in today's show. In our 360 Spotlight, the CEO of nCino will be joining us to take us through the company's recent earnings and also talk about how an AI digital assistant is transforming how banks are operating. Also, Amazon announced the acquisition of Globalstar to bolster its Amazon Leo platform. Kevin Green will join us in our Disruptor to take us through the latest news and have
have an example trade for us. Then in our 360 round, we will take a closer look at Johnson & Johnson's earnings that were released before the bell. We'll dive into the numbers, also take a look at the guidance and where it performed well and where it didn't. Before we get to that, let's take a look at how the markets are shaping up on this Tuesday morning. We are green across the board here on the S&P. We're trading about 0.75% higher at 69.39 right now. The Nasdaq is 1% higher at 25,639. On the Dow, we've added about 285 points so far this morning. We're at 48,502, and the Russell 2K is up 1.4% at 2707. The 10-year moving lower. We're at 428, below that 4.3. The dollar is at 97.79, also lower, but gold moving higher, up 1.25% at 48.2560 a troy ounce right now. Crude oil at 97.14 a barrel. That's down almost 2%. And Bitcoin, 75,160. That's the highest number we've seen. And just trying to break out of that range, sort of capped off around 75,000, up 2.25% right now. I do want to welcome in Alex Coffey, though, our senior equities contributor here on the network, to take a look at one of the big announcements that we got and some stocks on the move. We're talking about Oracle's expanded partnership, we'll call it, with Bloom Energy.
Yeah, Bloom Energy having an extraordinary last 5 days, really capped off by today's performance, up over 20% today. Marley, BE is the ticker, almost 60% in the last 5 trading days. And as you mentioned, they announced an expanded partnership with Oracle, where Oracle has agreed to buy up to 2.8 gigawatts of Bloom's fuel cell power to, again, continue to supply AI and cloud data centers. 1.2 gigawatts were already under contract, with deployment starting this year and expanding into next. Bloom's modular fuel cell systems allow data centers to come online much faster than traditional power sources, which is critical as AI continues to strain sort of that global electrical supply. Now, Oracle elected to expand this deal after Bloom delivered a fully operational system in just 55 days, which was way ahead of their planned schedule. And this partnership underscores how AI data center growth is driving just massive, massive demand for all sorts of power needs.
And with these names, Bloom seeing a great day, Oracle seeing another great day. They had a great day yesterday. They're up 5% this morning. But there have been consistent concerns about the roughly, I think it's $100 billion or so in debt that Oracle has funded to build out this massive AI data center build. What are the analysts saying about this deal or either name?
Yeah, JP Morgan called this deal a stamp of approval for Bloom's momentum, saying that scale could justify further capacity expansion. Evercore ISI said the agreement shows hyperscale AI demand is now translating directly into gigawatt scale power contracts. Baird noted that the Oracle relationship remains a key positive for Bloom, but it does, again, kind of caution the execution risk as Bloom tries to ramp this up. So easy to deliver one fuel system, that fuel cell power system on track and ahead of schedule. But as this ramps up and the needs grow, kind of hard to scale that up. At least that is a risk for this company. But you also would see today, we don't have them on the screen, but you could go across all the different power names having really nice days, kind of on the back of this news where, again, these deals just keep sprouting up all across this industry.
Yeah, the data center build-out isn't going anywhere, and energy, the key component to powering it. So a good day for Bloom, up more than 20%. A good day for Oracle, continuing a good stretch there, thanks to Alex Coffey, our co-host of Next Gen Investing here on Schwab Network. But I do want to broaden out our conversation, talk more macro with our next guest. Joining us now, Ty Lassiter, the CEO at Lassiter Capital. Ty, great to have you on the show. I'd love to just start with your thoughts on the market action we're seeing. We've heard from a few of our big banks, earnings season kicking off here, some developments, or I guess maybe lack thereof, on the conflict in Iran, but the markets are seemingly resilient.
Yeah, Marley, we've seen a strong market presence so far today, and I think we're still seeing the eyes of optimism and hope coming from what was earlier on expected to be a short time in Iran and maybe a short conflict, and it's taken a little bit longer than expected, but we've still got optimism trading in the markets right now. But we've also seen a big pull on privates and alternatives, and many of the large private funds halting their redemption requests with focused around having some opportunities to start deploying debt and capital in some of the private spaces as well.
Yeah, I mean, it's certainly a lot to unpack there. I want to stay first with Iran and some of the reaction that we've seen, because just general commentary across the board, even including from the president, is that the reaction is a bit more muted than I think many people were expecting, despite the fact that we still have volatility. So I want to talk about oil, really. I'm looking at oil right now. You know, we're down below $100 a barrel, holding pretty firmly there. Even on Brent, we're below $100 a barrel. But we've seen, you know, quite a bit of erratic movement in terms of oil. What are your expectations about how long we can sustain this volatility in oil prices? We're already seeing it show up at the pump, but until it starts to affect inflation.
Yeah, well, we've really seen it show up at the pump already. And, you know, even here in Texas where I'm at, and we're seeing much higher numbers than what we were seeing earlier in the year. And we know that this has been a focus of Trump's since early on in his presidency this time around. So, you know, I don't think we can take very much long-term uncertainty in the Middle East before it really starts to take a massive impact on inflation here in the U.S. and we start to see prolonged effects of it. You know, I think if we get some clarity here in the coming days, as we were really already expecting to have, then I think we can start to see that normalize at the pump. But until then, with the current uncertainty that we have, I think we're going to continue to see, even with oil trading under 100, we're still going to see high prices at the pump just because of all the uncertainty and how much of our reserves are we going to have to utilize, if at all, and really how much impact are we going to have in Iran and with the Port of Hormuz and everything, as far as having the ability to access lower cost oil.
I was just looking at the gas prices by state and really wishing I was in Texas right now instead of Illinois. We've got you by about 60% on the average right now, Ty. It hurts every time I have to fill my car up. But, you know, as far as how much this complicates the Fed's path forward, you know, certainly these inflation concerns have changed the path forward potentially. We even had Treasury Secretary Bessent come out and say that the Federal Reserve could wait now because of the oil spike, which is certainly a departure from what we've been hearing from him for the past several months, saying that was the only missing ingredient to having a booming economy, was that the rates, you know, needed to be cut. So what do you see for the Fed going forward, also knowing that we've got Warsh's confirmation coming on Tuesday, which may or may not be blocked, a vote may or may not be blocked. There's a lot of complication here for the Fed.
Yeah, we've got a whole lot of complication. And then on top of that, the Fed, for the first time in over a decade, started inquiring into our large national banks and what their exposure is to the private credit markets as well. And so you take all that into consideration with the changes going on in the Fed, with the anticipation and expectation that the Fed should start lowering interest rates. We've seen, you know, I don't think we're going to hit the 2% number CPI. I think 3% is just where we're going to have to all come to grips with, and with what we've seen, you know, post-COVID and everything. And so I think we've got so many moving parts going on in the Fed right now. And then you add to that the impact that conflict in Iran has, as well as the debt markets across commercial real estate and many large commercial real estate bridge loans coming due over the coming months that are going to impact significantly the debt market. And so I think the Fed has a really tough job in front of them as it pertains to what their policy is going to be, especially with the coming change with Bessent coming in.
And Ty, I was just refreshing the FedWatch tool just because on a daily basis it seems to move around quite a bit, and it looks like the markets aren't even considering pricing in any kind of movement in either direction really until September. What's your base case for the Fed this year?
Yeah, I still think we're going to see somewhere between a quarter point and a half a point move. I think we're going to have to see that because we've got such a discrepancy between supply and demand in housing. And, you know, I understand following CPI, we're trending close to where The Fed would like to see it, but we still have a major unaffordability crisis on our hand as it pertains to housing. And as long as we continue to see that, really it doesn't matter how low they get CPI inflation if the majority of Americans can't afford to live in their home. And so we've got to have a focus there. And in order to focus on addressing the supply issue, interest rates need to creep down a little bit and make it more functionable for operators and developers like myself and many others across the country to start deploying capital again. Because with interest rates where they are today and the unforeseen future and the turmoil that we have going on, then it makes it much more difficult for new development to start and really be a focus, just because the numbers don't pencil out. And so when that's the case, supply and demand is just going to further spread apart.
So Ty, as you're looking at where to deploy capital right now with that uncertain macro backdrop you highlighted and also the affordability crisis that we're dealing with in the housing market, where are you seeing opportunity?
Well, you know, I'm seeing kind of counter-correlated markets right now from as it pertains to the equities market, and this goes back to, you know, Warren Buffett or anybody else that focuses on real diversification. And right now we've got about $8 billion worth of bridge loans on CBRE commercial real estate that is coming due in the near future. And with interest rates sitting at where they are, those bridge loans are not able to be taken out with debt. And if they are, operators are having to come to the table with significant amount of equity, and many operators don't have that equity right now. And so where I'm really seeing an opportunity is many of our lenders are approaching us for to step in and take over a loan, and those lenders are willing to negotiate discounted payoffs on those loans. And so, you know, you may have a $50 million asset that an operator is all in at $50 million, and they've got a $35 million loan, but in order to refinance and get out of that bridge loan, they're only able to get a $28 million loan. And so that operator doesn't have the access to capital to pay down the loan by $7 million and get new financing. And so we step in and we negotiate a $30 million discounted payoff on a potential $50 million asset. And so we're in essence getting about 35 to 40% of equity at the table when we step in there. And so, you know, when you're looking at investments, I like to have equity on the front end. I like to know that I've got a foreseeable path to gains. I want appreciation, and I want some cash flow along the way. And so those aspects, when you look at the private markets in today's market, they really bring that. Whereas the equities markets have brought that for the last 4 or 5 years.
A foreseeable path would be such a wonderful thing. If you can send a crystal ball here to Chicago, I would love one too, Ty. Really great talking to you. Thanks for being on the program today. Ty Lassiter, the CEO of Lassiter Capital. And we've got a lot more for you today on Trading 360. The big threes coming your way next. We've got 3 stocks, 3 charts, and 3 trades for you. Rick Ducat will be taking us through the technicals. Mike Shore is joining us to take us through the trades for Cloudflare, Twilio, and AST Space Mobile. That's next on Trading 360 on Schwab Network.
most iconic trading floor in the world, this is Opening Bell with Nicole Petalides. Live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need, all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab has everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, 3 trades for you. Rick Ducat, of course, taking us through the charts today. And here to take us through the trades is Mike Shore, Director of Trading Education at Prosper Trading Academy. Mike, great to have you back on the show. Would love to kick things off just with a big picture thought on the market action we're seeing, the response we're getting to Citi and Johnson & Johnson this morning. Earnings is now underway.
Yeah, I'll be very frank that I thought that we would have a little more of a push to the downside, but the market is saying, hey, listen, if you can get all this stuff that's going on over in the Middle East, if you can clear that up, we're buying. And now it's just a matter of timing. The market wants to go up. And so then you have to kind of pull back and say, okay, let's not be super aggressive here, but the market wants to go up. It's asking for it.
Yeah, the market has certainly been trying to rally even into the close yesterday. I was watching it rally even more. But as we take a look at your big three here, you've got a pretty battered name, at least in the last week, as your first pick here. You've got Cloudflare. They're down more than 15% just in the last 5 days of trading. So take us through this one, Mike.
Yeah, I think that one is a classic panic, and now and we are looking at coming at earnings not too far away. And so I think that, we tested the lows. They tried to, they were kind of, rallying a little bit. Now we're back into that area where I think that we hold here. I like an iron condor here. Before earnings, so just not this week, but next week, the April 24th, 160, 165, 190, 195 Condor. Sell that for 250. That means that we can make 250, we can lose 250, even odds. I think that we just kind of sit here until earnings. And so let's take that decay and wait. And then that iron condor is before earnings. And then, let them figure out what they want to do with earnings after that.
All right, so a pre-earnings play. They've got earnings coming up on May 7th for Cloudflare. But Rick, as we take a look here at the chart, some you can even see it there. Massive volatility we've seen in this name, particularly in the last few weeks here. So walk us through what you're seeing in terms of the technicals.
Yes, a challenging, tricky time for many of the stocks in this space here. Cloudflare specifically has had a big plunge during the past couple weeks here after failing to overtake this resistance level near about 230 or so. Now we find ourselves in a situation where we are dropping below the 181 level, our green line here. If you were to backtrack, you can see it matches up with some old highs and subsequent lows. Now, the 160 area, you can see that was another low point and then repeated low point here. That could be on the horizon if the move downward does continue for now. But our blue, steep, sharp trend line does seem for now to have been breached, but price is retreating once again. We're right around that general area here. So a tricky situation for this one to be sure. When we do look at our moving averages that we follow, one compelling thing that we do see right now is that price is breaking below our long-term 251-day exponential moving average in orange. That comes in right around 184. So if price does recover and stabilize above that level, that would be a no noteworthy development. But for now, our short-term 5-day EMA in dark blue trending lower and roughly lining up with that same longer-term EMA, giving us a confluence point to watch. RSI trending lower still, below the 50 midline, but managing to stay out of the oversold area here. And, you know, many of the names in this space, it's kind of the general theme is traders wondering if perhaps we're due for a bounce as everything has been so beaten up here. So what we do see now when we look at our volume profile study is we retreated back to where the volume really starts to dry up around the 170, 165 level, and now we're seeing a bit of a bounce back here. 193 is our point of control, our thick red line. So that could be another area to watch going forward to the upside.
All right, and right now, Cloudflare trading lower today. We're down about 2.5%, just below the 180 price mark right now. Now, your second pick today, Mike, also in the software space, not quite as battered as Cloudflare has been, but, you know, caught up definitely in the massacre. Although flat today, we're talking about Twilio. Walk us through this one.
Yeah, so what I'm looking at, I do like the bounce off the lows. So I'm not so worried about the downside because the market's telling me not to be worried about it. The market doesn't care what I think. But so what I want to do here is this is more of an IV play. Yes, there is a little bit of a bullish bias to this, but buying a call calendar here, and because we have earnings coming out, excuse me, vol is not all that high. And so I want to play this bullish momentum, but I want to play with the IV time structure here. And I want to buy the post-earnings implied volatility. I want to sell the pre-earnings volatility. And then I want to get out of this before earnings. So I have a slightly bullish bias to this, but also playing the implied volatility that will hold. It may even go higher. That's only good for us. And then selling up in between there. So a slightly bullish play, but more of an implied volatility play.
All right, so slightly bullish play here for Twilio. Twilio's earnings are coming for us on April 30th. Rick, what are you seeing in terms of the setup here?
Right, so not quite as dramatic as our last chart in terms of the swings, but still quite a notable amount of volatility. 135 is roughly this gap level that we saw right here. So we could see that was an interesting area to be on the lookout for. Gaps are often worth keeping track of in your trading here. And this white vertical line here, that would be the earnings event coming up. So that would be kind of one of the time boundaries for this general trade here. So when we look more specifically, 138 high points here that we failed at once again recently about a week ago here. A relative low came in at 113, our green line here. Then 105, a repeated low point as well that came back into prominence shortly before and after our last earnings event in mid-February here. The general trajectory here, you could draw a very modestly sloping line going down across the highs or up across these lows. Not really a very strong trend or anything, just kind of trying to describe the general trajectory seems to be narrowing somewhat as we approach our next earnings event here. Now we can see that once again our 251-day EMA in orange came back into focus here. We did have a dip below that level a couple sessions ago, but our price rebounded. We managed to close above that level, and for now it seems to have been supportive still. We have a confluence of our three shorter-term exponential moving averages all coming together between about 124, 125. So this gives us another convenient point to be on the lookout for as a tipping point to the upside or the downside here. The more indicators that you have lining up around the same point, the greater emphasis there is on that as a potential tipping point or pivot point in this kind of trading here. So RSI trending lower still. We are a bit below the 50 midline at this point, but not really a super clear short-term trend that we could make sense of here for this indicator either. So finally, our volume profile study, the big node area that we are finding ourselves within now, about 120 to 133 or so. Those are the points where beyond which the volume starts to dry up. But there's another node just below near 115, kind of matching up with our recent low points. Meanwhile, 105 roughly, our point of control, suggests that the heavy trading area was more toward the downside here. That could be a major supportive area if earnings do disappoint, in some major way going forward here. But things really start to thin out above 135.
All right, above 135 right now. We're at 123.80, mostly flat on the day for Twilio. Now, your last one here, we've got AST Space Mobile. We're moving away from software. Some big name competitors for this company, Starlink, Globalstar, but they've got some big partnerships too, AT&T, Verizon, and have performed really well year to date. So why AST Space Mobile, Mike?
Yeah, I was actually looking for the breakout here. And then this morning that Amazon came in and said they were buying GSAT. So, GSAT's gain is AST's loser, but I actually like it a lot more down here at that 92 level. I had to put these together before the open, so I didn't know what was going to happen. But I'm still a big fan of this. Of the sector, and I think that this is one of the blue chip ones in there. I'm a buyer here. Definitely down at the 92 level.
Yeah, and certainly that Amazon Globalstar news, that Amazon's buying Globalstar to power its Amazon Leo service.
You have to tell me about that.
Yeah, well, I do appreciate you getting your trades and notes in, though, before the show, because I love that. I like being prepared, so I appreciate you, Mike. But right now, sending it down about 6.5%, but a better setup potentially for this trade here. So as we look at the technicals, Rick, what are you seeing in terms of this setup, obviously including today's downward move?
Well, I mean, even though we have had a decline since the open, the level at which we find ourselves is rather interesting. 93 is where I had highlighted on our chart already, because that was another of these gap levels here. We did see some fluctuation above and below it, but oftentimes you can find that these kind of can get a little bit messy here, but they still stand out going forward with your trading here. If you look at the closing prices recently, oftentimes we managed to stabilize roughly around that level here. It's also where our big rally paused after that large green candle here. So some other levels to consider to the upside. Around 107 is where we topped out a couple times recently. Up here, 121 is around where we had our best close, 121, 122. Meanwhile, to the downside, we had repeated low points here near 78. We did have one day where we saw a close that breached that level by a pretty wide margin here, but things quickly recovered. So that 78 level stands out as well as a potentially supportive area here. Now we have a situation where our three shorter term moving averages are clustering together here. We have our faster 5-day EMA kind of bouncing around. Meanwhile, our teal 21-day, our gold 63-day look much more consistent in a sideways grind. So the level near 90 or so, 89, 90, 91 roughly, that would be another potential breakdown point if you were more of a bearish outlook, or a supportive area if you were more bullish. So kind of around where we're finding ourselves now today. So an interesting potential inflection point. We can see as well that our green short-term kind of a trajectory line here on the RSI does seem to be getting broken, but we are still above the 50 midline as well. So, not really a clear break one way or the other just yet here. You want to wait till the close anyway before making any notable decisions based on this kind of technical activity. Finally, our volume profile shows 80 to 95 roughly is where we saw heavy trading more recently. We are, after our brief foray to the upside, we're kind of near the upper edge of that boundary. If we were to keep moving upward, 110 to 115 is the next kind of pocket of activity there that you might find some consolidation.
All right, and right now we are trading considerably lower at 92.30, down about 6.5%. But as Mike said, he likes the entry point better even than the setup before the open in the wake of that Amazon Globalstar news. Mike, we really appreciate you joining us for Big Three today. Mike Shore, Director of Trading Education over at Prosper Trading Academy, and also Rick Ducator, Lead Market Technician, for being here to break down the technicals. Coming up, we are going to spotlight the company nCino as they bring AI partners into the banking sector. Stay with us.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
My man.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab Coaching is concepts brought to life in the real world.
It's absolutely world class.
We have coaches who have been in the industry and around the industry for a long time.
We have different formats because people learn differently at different times.
We have webcasts running through YouTube all day, every trading day.
We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible is that? And it's free.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight nCino, its most recent earnings, and how AI is shaping the banking sector and transforming it. Joining us now to help us do that, Sean Desmond, the CEO at nCino. Sean, great to have you on the show. First, let's talk about your earnings. You delivered really solid growth. Talk to us about what banks are prioritizing right now that's really driving demand for your platform.
Happy to do that, and thanks for having me. The earnings was a high point for us to share our story, which we love to tell. And I think, one of those highlights is the investments we've made in AI and platform innovation are translating into the momentum in our business and the outcomes we're delivering to our customers. We highlighted our financial guidance across every key metric in our business, delivered exceptional results. ACV up 17%. Year over year, largely driven by customers embracing that AI strategy. So that growth is exciting to us. On the commercial side, we had our best sales quarter ever in the U.S. enterprise market in the past 4 years, in fact. We had expansion in mortgage. We had a top 40 bank sign up with our mortgage solution. And we have really strong momentum in our international business, highlighted by continental Europe as well as our Japanese market. So, I think, the imperative here being AI, at nCino, it's operationalized and it's in production at our customer sites with 500 of our customers have given consent to use our data to inform 170 customers that are already on our new agentic solutions. So while a lot of folks are opining about the agentic future, we're already bringing our customers on that journey here at nCino, and that's what's exciting to me.
All right, I have quite a few follow-ups in there, but first I want to talk about the growth and what's really behind it. Are you seeing a lot of your demand come from further adoption of with existing clients, or are you seeing a lot of new clients driving that demand?
Balance there. We have good, strong, healthy cross-sell, upsell motion in our existing core commercial consumer mortgage business in the U.S. domestic market. And we have nice momentum in new customer signage in continental Europe as well as our Japanese market. So, I think a balanced portfolio across solutions around the things that we do. And when we talk about the things that we do, we talk about onboarding, talk about account opening, loan origination, and portfolio monitoring solutions for our customers and where we do them. And that's across the globe with 2,700 customers to cross-sell and expand while we sign new banks as well.
And Sean, you mentioned that a lot of players are still opining about agentic AI, but you're really putting it into operation here. Walk us through how that actually works for the banks in practice.
Yeah, you'll hear nCino talk about our digital partner strategy, and digital partners are role-based agents in this market where you're seeing the dual workforce come to life, where we have humans working side by side with agents. We have 5 core umbrella partners, so to speak. We have an executive digital partner for the C-suite. We have an analyst digital partner that completes tasks for folks in operations and credit. We have a service digital partner that helps with member relationship management, enhancing the relationship not only at banks, but credit unions as well as IMBs. We have our processor digital partner that focuses on workflow bottlenecks and coordinating everything from retrieving documentation to doing calculations. And finally, we have our client digital partner that focuses on our customer's customer. So these agents are working side by side, mining through our LLMs and MCPs all the way down to the data layer to provide insight to customers and meet them where they are.
And Sean, I want to get your thoughts on some of this SaaS fatigue and the SaaS apocalypse. You pull up your company name, you're under the software sector. Obviously, all the names have been caught up in it, including nCino. But what is it specifically that you think differentiates nCino and potentially protects it from getting swept away in the tsunami that is the SaaS apocalypse?
I've heard the term. And, we are very convicted, and it's almost, serendipitous that we arrive at this point in our journey at nCino 15 years in, because the day I joined this company, I had conversations with our founding CEO that if we could serve up insights with the data that we have access to at the intersection at the time of CRM workflow and analytics, and now across all those things I highlighted earlier, that we would be onto something special. And it just happens to be that there's a new proxy to deliver those insights, and that's AI. And so I talked about our role-based agents, and it feels like this was always the plan at nCino. And, the agents are now here, and they're here with nCino. What I want you to really understand, and the market to really understand, is the data trains the models. And we have specific models in our banking ecosystem, like probability of default and loss given default and predictive intelligence models for the right structure of a deal and auto spreading. And you can only inform those models with the type of data that we have access to. And that's important, because if you want to automate your bank on public cloud data alone, that's not a conversation I feel is expressed with a lot of confidence in the C-suites of banks that I talk to.
Sean, it has been such a pleasure talking to you. Taking a look at your chart, you're trading 2% higher today for nCino at $17.50, up more than 16% in the last month, thanks to those earnings we talked about. Really been a pleasure. Sean Desmond, the CEO at nCino. Coming up next, we've got our disruptors. As Amazon is acquiring Globalstar, Kevin Green will bring us the latest on that news and also have an example trade for us next.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets. Welcome in Nicole Petalides, host of Opening Bell and the Watch List. Nicole, good morning to you. We're seeing a nice pop in the markets today, green across the board. I'm looking at the Mag 7 names, some really impressive moves to the upside there. What's sticking out to you so far in trading this morning?
I think about the 5 weeks of selling that we had in that weekend. I just was rereading an article about the Dow Jones Industrial Average in correction territory. The NASDAQ had already been in correction territory, 10% off the highs, those October highs. And then everything changed just when everybody was feeling terrible a few weeks ago, 2 weeks ago. Maybe some people, I actually know somebody who sold some stock that Monday, only to see 2 weeks of gains and gains this week. And now you have the major averages positive for 2026. And JP Morgan yesterday and Morgan Stanley were bullish and saying buy the dip and things like that with some caution. And today now you have two more Wall Street titans joining in and saying buy U.S. stocks, and that's Citigroup and BlackRock. So it's very interesting that they're now overweight equity. So there is some optimism here in the market. The other thing, and I know you're talking about Amazon in a moment, is the tie-up Tuesday action that we're seeing, not Merger Monday, tie-up Tuesday. You have Amazon and Global Store. You're going to be talking about that. Oracle and Bloom Energy, and the potential of United and also American Airlines. Some of us remember when United and Continental got together. I mean, in 2010, I remember that so clearly. It was the first thing I thought of this morning. In the meantime, though, stocks for the most part are really catching a bid, to your point, and we continue to see all these banks with mostly good news, higher profit and revenue in Citi, the best quarterly revenue in a decade, new highs. So mostly good news. Wells Fargo's pulling back.
Yeah, mostly good news, but good news for the Mag 7, which we haven't seen green across the board for all of those names. I can't remember the last time I looked at the board and saw green for all of those names, actually, at least in recent weeks. But Tesla having a nice pop today, not our top performer because we've got some really strong moves, Amazon, one of those. But Tesla got an upgrade from UBS. Can you take us through that note, Nicole?
Yeah, I will. And what's interesting is you still have, right now, when I look at the buys and the holds and all that, the UBS call is a neutral up from a sell. It's not great, but it talks about the prospects going forward. They have an unchanged target of 352. Stock's at 360 today. So it's not really a screaming buy. But what it is a bet on the future. And while there's been slow progress in Robo-Taxi and Optimus, they really see long-term AI opportunities. And that's what they're banking on, because they said also that Tesla trades on sentiment and momentum, not just fundamentals. And so in the near term, the demand has been challenging, and the EV demand overall has been challenging. The energy shortfall, higher costs, some of the higher capital spending that the company's having to do. But the big picture is they're turning positive on what is going forward. I mean, we know that Tesla actually built more cars than it sold and has had some of an inventory pileup, and that brings me to the JP Morgan note, where they have an underweight rating and a 145 target, and they don't love Tesla here. But overall, 46% of the analysts do have a buy rating. They have a $405 target. That's the average. It's a 364. 15% have a sell. And I haven't heard anything more than last week when we talked on April 9th about maybe a new EV, right? And some sort of SUV EV that was going to be a little shorter, a little more affordable. We haven't heard anything from that. That came from Engadget that day.
Yeah, certainly, Tesla, while it's debating if it's an EV company, an AI company, what its future looks like. Of course, SpaceX in play with all of this as well. There'll continue to be disagreement, but always fun to cover. Nicole, we appreciate you breaking down those notes for us. Nicole Petalides. Now it's time for the Disruptors. Kevin Green, our senior markets correspondent, here to talk about a different Mag 7 name. We're talking about Amazon acquiring Globalstar for $90 per share in cash or shares. Now, KG, this is a pretty big deal here. A huge name going to really help power Amazon Leo. Take us through this news.
Yeah, this deal is actually valued at around $11.5 to $11.6 billion. And as you talked about, it's around $90 per share for GSAT. And those that are actually holding the shares could either elect for the $90 cash, or they could actually get paid out in shares of Amazon stock of 0.321 shares per share of GSAT. Now, this acquisition obviously is a strategic move, especially when it comes to Amazon Leo and allowing their ability to have direct-to-device satellite capabilities. And so Amazon's going to basically take over Globalstar's constellation network, and they're also still going to provide services to Apple as well. Globalstar is providing constellation services for Apple, especially for the SOS type of services, the emergency services, being able to text if they're outside of cell phone range. Those services are going to still be remain intact with this Amazon deal. So they're trying to battle it out and try to be competitive when it comes to SpaceX. And we've heard a lot when it comes to the broadband space, especially when it comes to these satellite networks. The U.S. government's also spending a lot of money as well as resources and looking at trying to expand these networks over the long term in order to try to, once again, kind of provide more connectivity for U.S. citizens. So very interesting acquisition. Not that expensive when it comes to Amazon's pocketbook here, but something that's a little bit more revolutionary when it comes to their portfolio management.
Yeah, certainly. I saw a note from Roth Capital come through just while we were on air here saying that they believe this is Amazon positioning itself for a broader connectivity plus services platform, which, as you just pointed out, some heavy competition in this space. But when your pockets are as big as Amazon's, perhaps not a bad place to spread your wings into. But KG, I'm looking at Amazon here, and while we've had quite a bit of volatility in the last month, they're up almost 20%. Year to date, still, in positive territory here. So as you would look to trade this name here, with this pop to the upside here, about 3.5% today, for example purposes, how might you structure a trade for Amazon?
Yeah, well, if you're a long shareholder and you want to try to lock in or maybe hedge some of the position here, my example trade is actually a little bit more bearish because there are some gaps to the downside, and the stock has moved very aggressively off the lows. So looking at the April 24th, 245 puts, buying those outright for $4.20, they're going to be a little bit cheaper now, given the fact that the market continues to move to the upside. But the max loss on this trade is going to be $420. With a break-even point of $240.80. Max profit is if this stock goes to zero at $24,080. But once again, this is looking for a little bit more of a retracement after this really heavy acceleration of the upside when it comes to the price advance for Amazon.
Yeah, right now Amazon trading at $248.29, again up 3.5% on this news that it will be acquiring GSAT to help power its Amazon Leo platform and continue its deals with Apple. KG, thanks for being with us today for Disruptors. I'll talk to you again later on Market on Close. That was Kevin Green. Coming up next, it's time for our 360 round. We'll go through the earnings from Johnson & Johnson this morning. Stay with us.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round to take a closer look at Johnson & Johnson. The healthcare giant reported a 10% increase in sales during the first quarter, also increased guidance for the year, expecting sales of $100.8 billion compared with the previous estimate calling for $100.5 billion on adjusted EPS of $11.55 compared with $11.03 prior. Let's bring in our panel to dive into the numbers. Joining us, Arthur Wong, healthcare managing director at S&P Global, and Andy Wong, managing partner at Runnymede Capital Management. Great to have you both with us. Arthur, we got some really nice numbers from Johnson & Johnson today, but a pretty muted reaction to the upside here. You know, what are some of your takeaways from the report and the price action we're seeing in response?
Yeah, I think with the expectations, it's within the expectations, even though they raised their guidance. I think investors were expecting this level of performance for this quarter and going forward as well. So, and I think what really was impressive from this quarter for us is really the multiple growth drivers and diversity within both of its innovative medicine and medtech divisions that will really give us comfort for continued growth for this year and well beyond.
And Andy, what stuck out to you most in the report?
Yeah, I think that this is a company that is executing through a patent cliff really well. If we start with Stelara, sales dropped 60%. That's the headline. But the real story is what's happening underneath. Stelara lost patent protection, and instead of losing patients to biosimilars, J&J is migrating them to its own next-gen drugs. Tremfya beat expectations by $400 million, and they just got FDA approval for Icotide, a new oral psoriasis treatment. This is exactly how you manage a patent cliff. You cannibalize yourself before competitors do. And zooming out, this is their 5th straight quarterly beat. That suggests that it is not a one-off, it's execution.
And Arthur, as you look at some of the drugs that they're putting out here, you know, Andy just highlighted that, yes, Stelara lost its patent there, but the customers are still staying within the Johnson & Johnson ecosystem. What is that saying to you about their long-term growth and the pipeline that they have moving forward?
Yeah, no, it points out that they've been able to continue to maintain the patients, but continue to invest in their pipeline and to identify and have that follow-up drug available and ready to come out before their drug loses patent expiration, so they can get a jump on transferring the patients over. And of course, the drugs have to give a additional benefit as well, right? From safety or efficacy or just convenience standpoint, and they've been able to execute on that across multiple products.
And Andy, oncology drugs were driving a huge upside in these numbers. From your viewpoint, how sustainable is that growth trajectory for Johnson & Johnson?
I think it's quite significant here. If you want to understand J&J's growth, oncology is the place to look, specifically Darzalex. It generated $4 billion this quarter versus $3.4 billion expected. That's a massive beat from a single drug. And at this pace, it could exceed Stelara's peak as J&J's top product. At the same time, you have Carvykti, its CAR-T therapy that grew over 60% with new FDA approvals expanding its use. So I think the shift is clear. Immunology used to drive the business. Now oncology is the engine and increasingly the future.
And Arthur, as we take a look at oncology, it's expected to become a $50 billion franchise here. What's the biggest catalyst for J&J to get there?
I think in terms of just continuing to execute on, in terms of finding those patients and transitioning them over to their new generation products.
And Andy, as we look at large cap pharma right now, you know, we're getting lots of headlines from big names, from small names about seeking FDA approvals, clinical trials, things going right, things going wrong. As far as J&J and looking in the large cap space, where do you view them? Are they one of the cleanest stories? Are they in the middle right now?
Yeah, I think investors are going to have to make that choice whether they want a large cap pharma name and then balance that with smaller cap, faster growers. But I think investors appreciate J&J's portfolio and how diversified it is. They have more than 28 products generating over $1 billion each. That's across multiple therapeutic areas, and that breadth matters. So when Stelara drops 60%, the company can still grow revenues nearly 10%. Most pharma companies don't have that cushion, and I think that it gives J&J the flexibility to invest in R&D and take bigger risks because they're not dependent on one or two drugs.
And Arthur, last question to you, and we're a little bit tight on time, but I see you have a AAA rating on J&J, but do you have any concerns about their ongoing litigation over their talc product and how much of an overhang that presents for the stock?
Yeah, I think investors will have to get comfortable with the fact that there will be periodic headlines coming out of there. I mean, the talc litigation, they've been frustrated. J&J has been frustrated in their past attempts to try to bring closure to it. There's still a large number of cases remaining. And I know they had a setback with the Daubert hearing late last year, but I think J&J continues to prevail in an overwhelming number of the cases, whether initially or on appeal. And I think these cases, even though there's a lot of them, it will take time. And I think given J&J's expected continued strong performance, their ability to absorb any impact of any potential future settlements is well within the current ratings at this point.
I really appreciate you both joining us today to take a closer look at J&J, trading up about 0.8% higher right now at 240.06. Arthur Wong from S&P Global and Andy Wong from Runnymede Capital Management. Also want to thank all of you for being with us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app in the Apple App Store. You can also tune in 24/7 on schwabnetwork.com. Stay with us. Fast Market with Diane King Hall is coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Schwab Coaching is concepts brought to life in the real world.
Schwab Coaching is learning constantly.
It's relatable, it's practical,
clear, understandable,
and hopefully entertaining.
Take it for what it's worth, but I think it's absolutely world class.
Schwab Coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry and around the industry for a long time.
So the nice thing about Schwab Coaching is that clients get access to 9 different sets of expertise.
We want to engage with you and chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade. So we shall see.
We have different formats because people learn differently at different times.
If somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
We've got this ongoing 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education.
It's really unique, not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that? And it's free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up on noon Eastern here at the New York Stock Exchange and Wall Street adding to its gains today as investors look towards an off-ramp to the war with Iran. Let's get right into a check of your scorecard as we hit the lunch hour on Wall Street. The S&P 500 right now rallying about 1%. You've got communication services followed by consumer discretionary and information technology at the top of the leaderboard in terms of sector price action. The Dow right now gaining more than 0.5%. NASDAQ 100 up 1.25%, touch above that. Russell 2000 is the belle of the ball, rallying almost 1.5% right now. Here's the roadmap for today's show. We'll look at example option strategies for ASML. It's got earnings coming out. Plus, the team from Likefolio will be along with new sentiment data on DoorDash. And back to banking we go with Morgan Stanley on our radar ahead of its results due tomorrow. Now that we've got the roadmap for today's trading action, it's time to bring in my co-host. You've got Tom White in our Chicago studio and Kevin Hinks joining us live from the CBOE. As you know, we've got you covered from exchange to exchange and beyond. So we've got Wall Street higher right now, still keeping a close eye on the latest headlines around prospective talks between the U.S. and Iran. It looks like there is negotiating happening or about to happen further. From the looks of oil prices, we're approaching $92 a barrel. It seems like the view is that there will be progress. Tom, how do you read the tea leaves?
Yeah, the optimism continues here for risk on assets. You're seeing that in equities today. I mean, the S&P 500 now 0.7% away from its all-time highs. You know, we've made up all that ground from the start of the war as far as the slide that we saw in equities. So that's a positive. There were some comments. President Trump to the New York Post stated that talks could be happening over the next couple of days. I think that's the optimism that's built into the equity market that, hey, we'll get some deal before the ceasefire ends, and that'd be a positive for risk on assets. And then you throw in the fact that, you know, you've got crude oil down 6.5% today, back near the $92.50 a barrel level. That's a definite bonus. But you also throw in the blockade that the U.S. started. There's been reports that they've turned away multiple ships, and maybe that's going to cause some consternation from Iran, where they're willing to come to the table and maybe push back against maybe some of the hardline notes and bullet points that they had in the latest rounds of negotiation. So that would be a positive also. But yeah, I don't know if it's a head scratcher that we're rallying as much as we have and that we're back to these levels as far as the benchmark S&P 500, but the optimism's definitely there, and maybe earnings might be the you know, the next leg up here for equities.
Yeah, a lot more green on the heat map today. Kevin, what's your take?
I think this is just a further, you know, the risk is coming out of these markets. You see a VIX 18. It's interesting. Forgive me that I go back to my futures trading days. The front expiration crude oil is really down a lot more than the back months. The front month is down 6.5, almost 660. But remember, I kept talking about 130 days out, how it was not up as much. Well, it's only down about 2 points in the September contract. So what's happening in the crude oil markets are the spreads are coming in, right? The risk premiums getting taken out of the front expiration that's only got 7 days to go. The June expiration is trading only just below $89. So those spreads that, remember, I was talking about was $20 wide is only $12 or $13 wide now. So what's happened, two things. Crude oil's coming down, but the front month is coming down faster than the back months. It's the stuff I love to watch, Diane, but most of all, the overall risk premium and tension as we go into earnings is really starting to come out of this market. Like I said, an 18 VIX, we were a 31 VIX. And so a lot of risk premium coming out of these options, Diane.
Okay, all right, let's get over to the banking sector, you guys. There's a bifurcation in reaction to the latest results from the banks. You got thumbs up for Citigroup. That stock continuing to add to gains, up 2.8% right now. Let's do a check of JPM. Little change, off just 0.5%. Wells Fargo, meantime, is lower by 4.75%, though off of the lows of the session. They didn't like those results. Tom, what's your take when you look across the banks?
Yeah, I think the continued outperformance of Citigroup. Jane Fraser doing a great job with that bank. Net interest income came in above expectations. That was the the kind of shining star for that report, and it's why the stock is hitting more 17.5-year highs in today's session, up 2.75%. J.P. Morgan, they didn't put aside provisions for credit losses as much as the street wanted. But then, you've got Jamie Dimon commenting on the economy as a whole, what could possibly happen. But then you look at Wells Fargo. They missed on revenue. That's, a dent in their earnings, and that's why you're seeing the pullback in those shares. But you got to remember, guys, out of these, two stocks, J.P. Morgan, Wells Fargo, they were just at all-time highs at the beginning of January, just like Goldman Sachs. We talked about that yesterday. Maybe it's a little bit of profit taking. Maybe it's some consolidation before maybe the next leg up. They weren't bad reports, maybe besides Wells Fargo at this point. But this is a good stepping stone, I think, for the earnings season, where they're at the front line of what the consumer's doing, and they're still seeing pretty robust growth here. And does the economic environment with interest rates where they are, yield curves where they are, beneficial to these, these companies moving forward. Now, the IMF did come out with a report today and lowered their growth estimates for not only domestically here in the U.S., but overseas also, just a little bit due to the conflict in the Middle East. But that didn't seem to have any negative impact on what we're seeing out of the banks. And you know what? 2/3 of this quarter were already built into these results. Maybe you start looking at guidance maybe next quarter for some of these banks. But I think this is a good sign for corporate earnings. Can we have another, above average expectations? Because I think the growth rate for the S&P 500 is supposed to be 13% here for the for earnings, and maybe that'll come to fruition.
So are we on our way back to new highs? Kevin, your take when you look at the banks?
Yeah, Wells Fargo, a little disappointing in the revenue numbers. Jamie Dimon did guide for lower net interest income. Well, if you think interest rates are going to come down the second half of the year, you may be doing that. I think a win for these banks are holding the current levels, like Tom mentioned. They've had great runs. Their valuations are a little pricey. So if they can hold these levels with an earnings report, it's a big plus. And, the transformation of Citigroup, Jane Fraser doing a great job bringing that company, getting all the losing parts of the company out and getting it on the right track. Yeah, Jane Fraser doing a great job in Citi. That's an ugly job to transform a company like she did. So all things considered, I think if banks hold these levels, it's a plus for the start of earnings season. Wells Fargo has it. Goldman, just a little, like I said, J.P. Morgan, just a flesh wound, Diane.
Okay, just a flash ruin. Let's turn to the skies. We got shares of American Airlines flying higher, up almost 9% right now on reports that United Airlines CEO floated the idea to government officials of the two air carriers merging. This is very curious to me, Tom, because I just can't see. I know this is a government that would be more friendly to, kind of M&A activity, but we're talking about two huge airlines. Tom, your take.
Yeah, two of the three biggest, and it would create the biggest here domestically. You know what, guys? I'll put a pin in this, and this is just my opinion. Nothing's guaranteed. This isn't going to go through. The regulatory environment for two of the three biggest carriers to unite. I think this is, the new administration, Transportation Secretary Duffy admitted that maybe there would be, some M&A activity within the airline space. I think they were probably going back to maybe some of the consternation and flux that we saw from the Biden administration when they pushed back against the JetBlue and the Spirit and, and all that mess in the M&A space at this point. But I can't imagine these two being able to get through the regulatory process to join forces. Now, Scott Kirby going to the the White House or with the administration on February 25th made that clear. It's like probably just reaching at straws, because what they want is the international business to compete more on that those routes, right? But I don't know. I think if you look at it, part of the reason that we're seeing the rally in UAL on this news, 4%, is the fact that crude oil is down 6.5%. And, American Airlines up 8-9%. Maybe that would be up 3-4% with the rally that we've seen, but it's because of crude oil getting hit right now. So my thought is that, hey, they can explore this all they want. I just can't imagine in any scenario where they would allow this to go through, because you know what it means? It most likely means higher fares for everybody.
Great perspective there, Tom. Yeah, I can't see how. I feel like it would be an uphill battle as well. Kevin, your take.
New administration, new ideas when it comes to mergers and acquisitions. And remember something, it's a couple things. Go back to Ed Bastian's comments after their earnings. He said a lot of major carriers don't make money. Who was he referring to? Look at the balance sheet. Look at the issues that American's having. It may help American to get taken over or merged with a company clearly with a healthier balance sheet and doing better in United or Delta, frankly. But American is got that key Dallas-Fort Worth hub. They've got all these new planes. But this is a company with an ugly balance sheet, and that's why the stock can't move higher. I think it's ambitious. I think it's aspirational, but it is not out of the question. Remember, Ed Bastian basically hinted to this in their earnings report. So I think something big is going to happen in airlines. They have to compete. The U.S. carriers have to compete with the international players in those international markets. And I think if you create this massive airline, you can do that. So I don't think it's not a high probability, but it's not off the table.
I hear you that it's not off the table. It sounds like they're certainly exploring this. I do think it would be an uphill battle. Like, I agree with Tom's thought on that, especially when you think about the consumer focus and this being a midterm year. But let's talk Amazon. So Amazon's inking this multi-billion-dollar deal to buy the satellite firm Globalstar. We know that's a competitor to Starlink. Shares of Amazon are moving higher amid this news. But Tom, I'm curious. So we're up about a little bit more than 3.5% for Amazon. It feels like this is more about the broad market, though, for the Amazon move, but your take?
Yeah, this is all about catch-up at this point, and not the condiment. This is playing catch-up to what SpaceX has at this point, because if you think about it, SpaceX already launched over 10,000 satellites. Guess how many Kuiper, and now it's called LEO, has launched? 241 as of April. So they're trying to play catch-up by buying, Globalstar at this point, and creating that spectrum. Creating their outlook for moving forward for launching this competitor to Starlink at this point. So they're playing catch up at this point. $90 a share. I mean, $14.5 billion, I believe the total, or $11.5 billion roughly was the total that they're spending on this. But I think this is a way to start to play catch up in this space. And, this is, I think, one of those unsung things that we've talked about with Tesla and SpaceX and Starlink is that, hey, Elon Musk is trying to create this ecosystem that's going to be, battle tested for what we're going to need technology-wise in the future. And I think that's what Amazon realized, that, hey, internally we're not be able to play catch up the way that we want to. Let's spend some money. Let's invest. Let's disrupt this area and compete on a more level playing field at this point. That's got to be the reason for this takeover.
So this is like another ecosystem thing, the Amazon, Globalstar, Blue Origin, when you think about all of that, trying to keep up with the Joneses, meaning the SpaceX and Starlink. Kevin, your take?
Trying to keep up with Elon Musk is an expensive business, guys, because he is several steps ahead. Tom, mentioned the numbers, but here's one little thing that no one's really talking about. Apple owns 20% of Globalstar. So that could be interesting when these negotiations happen. So who knows how it'll play out, but definitely Amazon paying to try to keep up or catch up to Starlink.
Doesn't seem like the street minds it, at least in terms of investor reaction today, with shares of Amazon up about 3%. We'll see how Amazon continues to move throughout today's session. But let's put a pin in it, guys. We've got bull versus bear coming up. The guys will get their example trades put together for ASML ahead of its earnings report. That is due tomorrow morning. We've got more fast market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. ASML is in focus ahead of its earnings due this Wednesday. Now, the stock has been on quite the tear this year, up more than 40%, hovering near all-time highs. Wall Street is projecting that earnings will grow about 12% from a year ago, and that revenue will top $10 billion when converted to dollars. Now, keep in mind, the Dutch chip equipment giant is the only company in the world that makes the most advanced lithography machines used to produce cutting-edge AI chips. Investors will not just mind the numbers, but hone in on management's tone on future demand from customers like Taiwan Semi and memory makers riding the AI boom. All right, time now for the tug of war on ASML. For that, let's welcome back in our co-hosts Tom White and Kevin Hinks. It is bull versus bear time. So before we get to your example trades, got to get your thoughts on the Dutch chip equipment giant. Kevin, I'll start with you. Your take.
Semiconductor leader, industry leader, riding the wave of AI chip for demand. This is a company doing all the right things. However, where the stock is right now and what they're projecting, this quarter and the quarters going forward are all going to be about margins, gross margins. They're expected to be for this quarter between 51 and 53%. That's down from 54%. So margins are coming in. Now, they claim they're going to be 57% by 2030. But with the valuation of this name, any weakness, like a drop in gross margins, could hurt this company. It's growing about 14 to 15% in revenue. Earnings are growing about 13%, but watch for the gross margins. That's the number I think the street will really be paying attention to, Diane and Tom.
All right, Tom, your take.
Extreme ultraviolet lithography. They have most of the market share, if not all of it, at this point. Their customers, right? Taiwan Semi, SK Hynix, Samsung, Intel. They're printing, this stuff uses these ASML machines. And think about it, the high-tech ones that they're selling the most of, 350 to 400 million per machine that they sell. They had a backlog of over 38 billion euros last quarter. So demand is there. It's outstripping supply at this point. And think about this, guys. One of the things, because the stock's just below all-time highs, they continue to do well, probably charge what they want, is that as we get more into maybe competitive pressures within this space, whether it's maybe TPUs getting developed, Broadcom using maybe these machines in the future, and everybody trying to make their own silicone. So what kind of footprint does that rely on for ASML, right? Where they can maybe expand from maybe those 5 big customers that they have on an annual basis. That might be, a growth area. But as Kevin mentioned, it's going to be about gross margins. It's going to be about backlog. It's going to be about the environment moving forward. Because if you listen to maybe some of the memory chip makers, they just don't have enough supply. What do they need? They need ASML machines to up that supply as they're building out these facilities globally, whether it's in Taiwan, whether it's in Korea, here in the U.S. So that's going to be a benefit for ASML, but the stock has moved up pretty significantly over the last couple of years.
All right. Yes, that is certainly true. So let's get into the example trades. Kevin, we'll start out with yours. What's your approach?
So my paper money trade is just moderately bearish, just because of the valuation, just because gross margins are going to be really under the microscope, and this stock has run a long way. So I looked at the expected move of around $80. No, that's not a typo. It's a $79 expected move. So I looked at the 1 week, buying the April 24th, selling the April 17th, just a 1 week 1440 put calendar. So about $75 is where it was, about $75. It's almost $80 now where it was. So a put calendar below the market, we were looking at about 11.35. It's actually a little higher now. It's actually the price has gone up to somewhere 11.90. Careful about liquidity here. Careful about price discovery on some of these spreads. So it's trading somewhere between 11.5 and $12. But I'm looking for a move slightly lower, down towards that 1440 range, Tom.
Yeah. And just looking at this, the price of a calendar, sometimes we talk about other stocks and you can buy a calendar, 1 week wide calendar for 50 cents or 30 cents. This one's roughly trading about $12. We've got about 11.35 here on the Analyze tab here. But let's break it down. April 24th, weekly options that expire in 10 days. Buy that 1440 put. Sell that same 1440 put in the near term. April 17th, options that expire in 3 days. 11.35 debit. The debit you pay is going to be your risk. And as Kevin mentioned, price discovery warranted on this. The bid-ask spreads on the individual options are really wide at this point. So the midpoint might show $12. You might be able to buy it for $11.50 or $11.35 as we've got here. So keep that in mind. But that is your risk, $1,135 per spread. You can see the apex of profitability at or near that 1440 strike. That's about 55 or about 60, 75 bucks below, 80 bucks below the current share price. So it lines up with that one standard deviation move, but you've still got a range. And you could probably put a range on it of between about 1380 on the downside, maybe 1510 on the upside, that you could be potentially profitable on this one. And one of the key things with Kevin's example trade, that 1440 put that you're selling in the April 17th monthly options that expire in 3 days, which is 65 or 75, 80 bucks out of the money to the downside, that's still worth $18 of option premium, and it's that far below the current share price in there. So while you're looking for the 1440 line that aligns with the 1 standard deviation move, you still got a nice wide range for this to be potentially profitable, but you do need a slight move to the downside on this. And the vol dispersion that we talk about, you're buying about a 62% implied volatility on aggregate in the April 24th weekly options on that 1440 put, selling about an 85%. So that does lower the price some, but a lot of option premium in those near-term options with the expectations of a plus or minus $80 move in the shares. Kevin, I went a little bit more passive on this one and maybe a little less risk on it also, where I just looked at selling something that's neutral to bullish here and going a little bit outside that 1 standard deviation move. So April 17th, monthly options, really short-term positioning, earnings type example here. Sell the 1420 put and then buy the 1410 strike put. So $10 wide short, neutral to bullish put vertical, paying or collecting roughly about a 220 credit on this spread. That's what you can make, 220 bucks with 780 bucks in risk on this trade. Takes your break even down to 417.80 to the downside, Kevin. But the thing that kind of stuck out to me on this out of the money passive trade is that the probabilities are really high on this one, which is why you've got 780 bucks in risk to only make 220.
Yeah, exactly. It's really amazing the levels of premium still in these. We talk a lot about some names just don't have big levels of premium. Can't say that here. These are aircraft carrier like premiums on some of these options. So big levels of theta, or in Tom's case, you can move that short strike way down and still collect $2.20. And Diane, if this stock were to go right to 1440, both spreads are profitable.
Okay, 1440, that's a number to pay attention to there for both of those spreads. Great stuff there. We've got cash tags coming up. The team from Likefolio will be along with the latest sentiment data on DoorDash. Those shares have been under heavy pressure year to date. The stock is catching a little bit of a bid today amid the broad market momentum. But we'll see what sentiment looks like right now. Keep it right here on Schwab Network. Fast Market. We'll be back after this break.
Hi, I'm Alex.
I'm Jane.
And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Kevin Hincks in our Chicago studio. Time now for our cash tag segment. For that, let's bring, well, Kevin, you're at the Seaboat. Kevin, I need more coffee right now, clearly. Let's bring in Landon. We got Landon Swan, co-founder of Likefolio, joining us to take a look at DoorDash today. And maybe I need to order some DoorDash. Maybe I need lunch right now. All right, let's go through the latest sentiment data you all have right now. It looks much stronger than I expected, especially when you think about how the shares have performed. But walk us through your latest data, Landon.
Yeah, I mean, we'll bring up this chart here in just a second, but man, when you see it, it's like this is one of those divergence opportunities. And you know, we've been tracking this company for a while, obviously. They're the leader in delivery services, that last mile delivery, and they've done a great job of expanding outside of just restaurants. They're in grocery, they're in retail. You know, they just got a partnership with Lowe's and Sephora. So, you know, they're in a way sort of trying to compete with Amazon, where you can get anything you want and get it very quickly. And so, you know, obviously you can get things even more quickly with DoorDash than you can with Amazon. Amazon's got a little bit better logistics setup, but still, that's the idea. Is if you want something now, we'll get it for you. You know, pick it up, whatever it may be, food, groceries, retail services, things like that. And they just completed their integration of Deliveroo out in Europe, so that they're not worried about fragmented legacy systems. So they've got that going for them. They've been focusing not so much on market share acquisition, but the long-term economics of, you know, getting order frequency up, getting basket size up, getting profitability. And really, I think the key is they just need more stops per drive. They need to have these dashers, you know, picking up several orders where they can hit 1, 2, 3 in a row instead of going back and forth. They need to be more urban instead of rural. There's just different ways to get them more profitable. But the good news for investors is they are by far the leader, and they're continuing to expand their lead. We've got, you know, if you look at the competition here, they're at plus 57% on a year-over-year basis, and that's off of high numbers. That's off of basically all-time highs, and so they're continuing to push the all-time highs, you know, beating everyone else in the space, even if they have great partnerships like Shipt does. And so, you know, they are by far the leader in this. And what's interesting, when we look at the stock price chart versus the, you know, the web visits, which is a huge indicator for DoorDash for us, it tells a tale of Likefolio strongly disagreeing with the market. You know, the stock was at 285, which was coming off the heels of some very strong data. And then it's been, you know, took a turn down, basically got cut in half down to like the 143, somewhere in there. And it's since bounced back up to 163. But this chart is interesting because so you got the blue line of the, you know, the Likefolio data, the dotted line of the stock price, and that bump after July of 2025 on the blue line, that doesn't look high, but at the time that was an all-time high. And so that, for us, justified that very high price target of 285. The stock has since moved down sort of with that data, but now they've crossed significantly where we're seeing the, you know, the usage data, not to mention the happiness data. This is not charted here, but the happiness data is off the charts as well. People love this service, and the stock has pulled back significantly. So we see this correcting one way or the other. Either the markets know something that we don't, or people don't really like.